let's get day 2 started here. I know I'm supposed to give a long kind of prompt about community decorum, but really what it boils down to is just be nice, or we've got to ask you to leave, in which I think I see a pretty civil group here, so I'm not too particularly worried. I guess we probably should call the roll first, shouldn't I?
Good morning, Mr. Chairman. This is roll call for the Select Committee on Blockchain for May 21st. Senator Ellis. Senator Furphy. Excused. Senator Nethercott. Representative Andrew.
Here.
Representative Singh.
Here.
Representative Yen.
Here.
Mr. Kaufman.
Here.
Mr. Pope.
Here.
Mr. Revel.
Here.
Co-Chairman Rothfuss. Chairman Western.
Here.
You have a quorum.
Outstanding. All right, folks, I think we had a really good discussion yesterday. I think my good co-chair did an excellent job leading that. And I think we have continued to add to our pile of intellectual inquiries. And we'll surely do more of that today. I think first up, we've got the Division of Banking. Mr. Bishop, you and your team would like to come and give us an update on open banking. Obviously, you all know the protocol. We all know who you are, but just state your name and who you're with.
Good morning. Yep, Jeremiah Bishop, Banking Commissioner for the Division of Banking. I'd also like to introduce you to some of my staff. Tyson Floyd, he's our Deputy Commissioner on our Safety and Soundness side, and Richard Slater, he's our newly appointed General Counsel for the division. So we're very happy to have filled that role. So yes, open banking. Yeah,
Please proceed.
So as I know, we all know, the original open banking bill was passed 2023. There were some amendments this last session. And then there was a deadline for the proposed rules for July 1st of this year. In past meetings, we had talked about the CFPB's 1033 rules. Last, I think, meeting before the session started, we gave an update that they had issued proposed rules. In October of last year, they were taking comments through the end of the year, and there's not an exact timeline on when those final rules will be issued. They expect it to be later this year, but that's pretty vague, so we really don't know. But what we were able to do was look at their proposed rules as well as comment letters issued. So I was able to look at several comment letters from banking organizations throughout the country and other specific banks that actually have locations in Wyoming. And we drafted proposed rules this spring, went through the comment period. I think we've seen all those proposed rules right now. That comment period has expired, and they're just waiting for the governor's signature to become final at this point. I kept the rules fairly simple going forward. I think I'd mentioned during past meetings that I would focus a lot on that notice. What needs to be in the notice as far as customer knowing what information is being shared, who it's being shared with. But I also wanted to put in there making sure that the customer has clear instructions on how they can revoke that consent for their information to be shared at any time. I thought that was an important piece. One of them was, one part was, I think, duplicative for one of the amendments that we did this last session. However, since I had to start that rulemaking process prior to the ending of the session, I wanted to make sure it was covered. So no harm done, but we're covered twice. So
Mr. Bishop, if I may, you talked about just outlining as simple and clear as path possible for consumers to revoke that access. Could you maybe just touch on that a little bit more?
Yes, all I did was just within the notice, the bank must provide clear instructions for how a customer can revoke that consent. And then just in the rules that the customer can revoke that consent at any time. And once they do, the bank must immediately cease sharing any and all information from that customer to whatever third party. It may be all third parties, it might be a specific third party. And part of that is the reason for the kind of the records. Part of the rules to making sure the bank keeps records of not only which third parties each customer sharing information, but also what information is being shared, so that that customer can request certain information at any time and then revoke it at any time. So that was one that I had talked to with it, not one of our banks, but a bank with a location in this state on how that could go. They said that could be a little tricky, so I kept it fairly high level. And then with the purpose of if it needs to be cleaned up later at a later time through an amendment, we would do it at that time.
Thank you, Mr. Bishop. Please proceed.
That's all I had on this. I just see if there's any other questions.
Hmm.
Like I said, hopefully, governor will sign them here by July 1st. Sure he will. After that, our goal is then to monitor this activity in the state, get feedback from banks or other institutions in this space, and see if there's anything else that we need to add to these rules. A big part of it is that third party risk management piece. See if we need to put anything in that, but we want to see look at federal agencies as well, to make sure that we're not differing too much from what they're doing on third party risk management. So again, this is a work in progress, we know. So next step is just getting feedback.
Mr. Co-Chairman, please go ahead.
Commissioner, I am curious about the draft CFPB rules. We don't quite know when they'll go into effect, but do you see any concerns if those were to go into effect based on what we have and what we're doing, and maybe highlight some of the differences?
Mr. Bishop, please.
Yes, Mr. Chairman, Mr. Co-Chairman, yes, they are, I was able to review those draft ones. I think I don't think there's going to be any conflict, which that was my main concern, was that there would be, if they stick to what was proposed, I don't think there'll be any major conflict. I think their rules, for the most part, I think they did a pretty good job of that. However, they also have a different scope. They put quite a bit of requirements on the actual third parties themselves. Us, we can only do the financial institutions, so they can go one step further, which is important. Part of that is also they put quite a bit of restrictions on the actual user interfaces of how this is actually shared, things like that. I think one of the things that they did do that a lot of people agree with is basically getting rid of what's called screen scraping, sharing login information with a third party, and I think everybody agrees that's not a very good practice. So I think they covered that pretty well. Yeah. So as far as next steps, the same thing. Hopefully they don't differ too much. They received a lot of comments. I think they received over 1,000 comments on the proposed rules. So we'll see what changes they make. And if there's any, same thing, if there's any conflicts, we'll have to adjust, or if they did something better, maybe we could learn from them. And then also same thing, maybe if we did something better, then we can be in contact with them as well.
Mr. Co-Chairman, follow?
Yeah, Mr. Chairman, one of the areas where we seemed like we were going to be stronger than the CFPB was on consent. Is that still the case?
Mr. Bishop?
Yeah, Mr. Chairman, Mr. Co-Chair, I believe so. Ours is that express written consent piece. And again, I think that is our scope is on the financial institution, so they must get the consent prior to sharing information, whereas the CFPB is more geared towards those third parties, whereas they're not getting consent to receive the information. But again, I think what I want to see where they come out to is what happens with that information once it's shared. We don't have as much control over that. If it's with a third party data aggregator, we don't have any authority over those institutions. CFPB might. And so what do they do with that? Because that's where some of this can kind of get hairy very quickly. So
Gotcha. Thank you.
Thank you, Mr. Co-Chairman. Imagine this committee drafting better legislation than the feds. Committee, any questions for the Division of Banking? Seeing none, was there any additional comments you want to provide on this topic? Well, all right. Oh, public comment. Anybody in the room want to testify on this? Everybody online? Okay. All right, on to the next agenda item. Obviously, don't go too far for this next one. Mr. Hopkinson, you can present from there if you want, but maybe just kind of walk us through this, through the committee, through this bill draft for starters, if that's okay. Or whatever you'd like.
Thank you, Mr. Chairman. David Hopkinson with the Legislative Service Office, walking through 25 LSO 28, Working Draft 0.4, Special Purpose Depository Institutions Amendments. This bill is before this committee at the request of the chairman. There was, I think, some previous conversations about some of the things that we'll go through in this bill. And some of it was presented to the chairman by the division. Some of it is from other parties. But there's essentially two kind of major elements to it. One is allowing for the conversion of a SPDI bank into a public trust. And that's pretty much the first 5-6 pages of the bill. And then the rest are some amendments to the SPDI statutes, making a couple of changes. And we'll talk about that when we get there. But it is something for the committee to consider. You know, if there was discussion about whether to draft this as one bill or two, but certainly as the committee considers this, they can take that into account and make that determination.
Mr. Hopkins, I assume that if it were to be two bills, it would be split along that conversion language, and then the second bill would be amendments to our existing speedy statutes. Is that
Exactly.
correct?
Correct,
Proceed,
Mr. Chairman.
please.
Then getting into the conversion portion of things over on page 2, it creates a new statute in 13.5.523, which would allow the commissioner, with the approval of the board, to convert the charter of a special purpose depository institution to a public trust company. And it provides that the conversion would occur as follows. A special purpose depository institution seeking to convert to a public trust would file an application to convert. It contains a comprehensive plan for conversion as required by this section and rules promulgated by the commissioner. The application would include a certificate signed by the institution's president and majority of the board, setting forth the action taken to support that proposed conversion. And the plan and a proposed organizational instrument that would include information required shall be approved by the shareholders, and all that would be done prior to submitting the application. The application shall include, under paragraph 2, a comprehensive plan for the conversion, setting forth any necessary disposition of assets and liabilities in reasonable detail, and any other plans required by the commissioner. I'll pause there to make one other note. This draft does give a great deal of discretion to the commissioner, and that's a policy question for the committee to take into account, but keep that in mind as we're going through that, because there's a lot of language in there that leaves up to the commissioner or the board without providing a lot of guidance, legislative guidance, to how that might be done. The application would be accompanied by a fee established by rule and regulation of the commissioner, and it shall provide for the discharge or assumption of all known and unknown claims and liabilities of the SPDI. And it would include other evidence, certifications, affidavits, documents, or information as the commissioner may require, including demonstration of how assets and liability will be disposed and the timetable for doing so. The commissioner will examine the application for compliance with this section along with Wyoming statute 13.5.510 through 520, which are requirements or obligations of public trust companies and any applicable rules. The commissioner may conduct a special examination consistent with 13.12.119C for purposes of evaluating the application. And upon receipt of that application, the commissioner would notify the board, which in its discretion may allow the commissioner to proceed without or with approval of the application on an expedited basis. Or if the board deems it necessary, they may require a process consistent with 13.5.502 through and 13.5.507, which are existing statutes dealing with the creation of a public trust company and the things that they have to do to become chartered. Where there is an expedited review allowed by the board, commissioner shall approve or deny a conversion within 90 days of receipt of a complete application. And the application shall not be approved until the board or commissioner has ascertained to their satisfaction that the proposed public trust company satisfies all criteria under 13.5.507A1 through 5, which we see in the staff comment below on page 5. And it meets all applicable requirements of 13.5.510 through 13.5.520. Again, that's public trust company and kind of their operational requirements. The staff comment there on page 5 again just notes what the obligations or requirements are for some public trust companies that they have to, the proposed company is only being formed for a legitimate object contemplated by the laws of the state, that the proposed capital and surplus are not less than the required minimums, that the officers and directors have sufficient experience, ability, that the name of the proposed public trust company does not so closely resemble another company as to cause confusion, and the applicants have complied with all applicable provisions of law. We're on page 6 now. A public trust company that results from a conversion under this section shall be deemed to have been in existence for the same period of time as the specie from which it converted, shall surrender its certificate of authority, and upon completion of the conversion shall not use the term special purpose depository institution or bank in its business name or in connection with its ongoing business. There is a staff comment there on the bottom of page 6, just pointing out that from review of existing statute, we do have language where state banks converting from out-of-state banks or federal charters, we've got that similar language to where they've been deemed to have been in existence for that entire period. I didn't see anything similar when we're talking about converting one from one type of entity from a trust or from a bank to a trust. So there may be some unintended consequences with that.
Mr. Hopkinson, what might some of those unintended consequences be?
And Mr. Chairman, at this point, I'm still kind of looking into that. I'd certainly defer to the commissioner if they've got anything in mind. There may not be anything, but that was just something I wanted to highlight because we haven't seen that before. So
Sure.
certainly I'll keep digging, and if I find anything, I'll let the committee know.
Understandable. Proceed.
And then on page 7, provides that the commissioner shall adopt all rules necessary to implement this section. And then lines 15 and 16 is just some conforming language allowing for the conversion or the charter. And so that covers the conversion portion of the bill. Proceeding then on page 7, it goes into the statute 1312-110, the required initial capital for speedies. And on page 8, it adds language that they shall have a paid up surplus fund of not less than 20% of its legally authorized capital stock and undivided profits in an amount not less than 3 years. That language that we see added there is consistent with other banking requirements and for requirements for public trust, but I'll defer to the banking division on the need for that change. I would note that other banks and public trusts are only required for 1 year versus the 3 that's established there. And then section 2 is a repealer. The purpose of this section is really just to allow for a depositor in a SPDI bank to be a natural person instead of, as currently is the case, being limited to a business. And so all it's doing is going into 1312-104 and repealing certain sections. In the staff comment, you'll see what's repealed. It's been bolded. So the language that's being removed would be a requirement for a depositor to be a legal entity other than a natural person, a requirement that they be in good standing with the jurisdiction in which it is incorporated or organized, requirement they be engaged in a lawful bona fide business, but it does leave in place, 2 requirements there so left in place is that they have to maintain a deposit with the institution totaling not less than $5,000 and make sufficient evidence available to enable compliance with anti-money laundering, customer identification, and beneficial ownership requirements. And then it further repeals subsection C and D, which are requirements specific to businesses. Section 3 then allows the banking commissioner, requires that they adopt all rules necessary on or before July 1st, 2025, with a split effective date. And with that, I would stand for any questions.
Committee, any questions? Mr. Hopkinson? See none? Mr. Co-Chairman.
So the one question I have, and I mean, it's probably more of a policy discussion, but getting back to on the bottom of page 8, Romanet 3, which is not being amended or deleted. Our original requirement was maintaining deposits with the institution totaling not less than $5,000. that was assuming that it was business side, not providing individual or natural person banking opportunities. I wonder if we should contemplate, maybe when we hear from the banking division, contemplate lowering that significantly if we're going to have opportunity for consumers to engage. Maybe $1,000 is more consistent with what we see in other limited banking institutions. But I don't know if you have any thoughts on that. Probably not, but it's something I wanted to raise at this point for us to discuss.
A statement in the form of a question. Mr. Hopkinson.
I have nothing to add to that.
Committee, any other questions for Mr. Hopkinson? Seeing none, thank you very much. Obviously, don't go too far on us.
Now, Mr. Chairman,
Which co-chairman?
how do we want to roll out hearing from the updates from our SPDI banks? Do we want to do that at this point and offer the opportunity to maybe weigh in and provide any thoughts along the path? Or do we want to, we definitely want to hear from everybody on any concerns they have with this bill. That might be a reasonable way to go about it, is get updates and comments.
Mr. Chairman, let's go ahead. I guess we can start with, you guys are okay with that? I think we're gonna let Ms. Long go last, but is either Julie or Trevor, are they?
Mr. Chairman, they're both online at the moment.
Do we also have Neil?
Yeah, is Neil?
Yes, he should be in.
Oh, Neil's
person.
here.
Yes.
Yes,
There we are.
Neil, since
Yeah,
Neil, you're here in person, let's let you take
absolutely.
first bite at the apple.
Excellent. And Mr. Chairman, on this, you
Go
know,
for it.
every year we've tried to get updates on the business activities, kind of learn a little bit about what our SPDI banks are up to and how things are going. If there's anything that we can do to help, recognizing it's a new charter type, and we've been very interested in trying to support those interests. So we look forward to hearing how things are going for all of you. You've also probably had the opportunity to have a look at this proposed legislation. So if you want to provide any comments at the end of your statement, I think that would be very welcome.
Mr. Parsons, just for, I know you testify a lot, but it just announce who you're with, or your name and who you're with, and you can take it from there, and feel free to comment on the legislation.
Thank you, Mr. Chair. Neil Parsons, Chief Operations Officer, Commercium Financial. I'd also like to introduce my colleague, Robert Slater, Director of Commercium Financial, and also a Lieutenant Colonel in the US Air Force.
Excellent.
Mr. Chairman.
Please proceed.
Thank you. Mr. Chairman, members of the Select Committee, would like to thank you for the opportunity here to testify today. Wyoming has been my physical home for the last 2 years, in my heart for 4 years, since I actually was asked to prepare a business case for Commercium Financial. We have nothing but heartfelt thanks for the committee, banking division, and all the folks who prepared such a well thought out, regulatory-driven framework for digital assets. I would like to take this opportunity to extend our thanks to our SPDI brothers and sisters in their battle with the Fed. We wish them every success and we support them 100%. Commercium has also been subject to this regulatory challenge, as outlined by our CEO here in Jackson a year ago. Before I pass on to Rob, I'd like to provide a very brief update of our progress to date. We have continued to strengthen our operations, policies, procedures, technology for both traditional banking and custody. We are 90% ready to open, subject, of course, to receiving our certificate of authority from the Wyoming Division of Banking, but we have it a headwind with funding in the current climate. Of particular concern to new investors is the lack of access to the federal payment system. Despite this headwind, we are currently in discussions, very serious discussions, with 4 large investment groups to raise the capital to open and the small amount remaining for operational monies. Access to federal payments, of course, paramount to our success. It's a very brief update. And with your permission, Mr. Chair, I'd like to pass to Robert Slater, who wishes to outline some thoughts as to how the Wyoming community can work together to achieve success. I'm of course happy to take questions now, later.
Thank you, Mr. Parsons. Any questions? Mr. Slater, please go ahead.
Thank you, Mr. Co-Chair. Again, my name is Rob Slater. I'm a director of Commercium, and as Neil mentioned, I'm an officer in the United States Air Force Reserves. Specifically, I'm the senior military advisor to the Air Force Research Lab Small Business and Strategic Partnering Directorates. So part of what my Air Force team does is what I call opportunity management. We're the tech scouts for the Air Force. So we're always on looking for new and emerging technologies. When we find them, it's not always the easiest thing to bring them into line with federal government practices and contracts. So we create new initiatives, incentives, and policies to harness these technologies. A big part of what we do is we partner across our sister services, academia, domestic and international partners. And really what we're trying to do is we want to ensure that, you know, our Marines, airmen, soldiers, sailors, and guardians are equipped to win, right? I mean, that's our North Star. It's really that simple. Now, saying it's that simple, it's a misnomer. It's a very hard problem to tackle and arguably unsolvable, especially when we consider the breadth, depth, and velocity of technological change we find ourselves in. So to drive this pace, we rely heavily on our partnerships across industry, academia, and government communities to ensure the United States not only establishes but maintains leadership in what we call the great power competition. And not to draw any false or sort of dramatic comparisons, but I don't think it's a reach to say that American banking itself is in a power competition. So in that way, I see a significant parallel in what we do in my other capacity and what the state of Wyoming continues to do in the pursuit of maximizing economic opportunities through new and emerging technologies. And I think I speak for my brother and sister SPDIs when I say I'm grateful for the courage that Wyoming continues to demonstrate in the face of adversity to be the leader in blockchain and banking. Now, to maintain that national leadership, we're going to have to strengthen our partnership across government, industry, and academia. Hear me with a couple words I keep using the theme. So recently, a few of our Wyoming digital asset and custody colleagues got together to figure out, you know, how to collectively establish, build, and expand the Wyoming SPDI charter presence. Now, this group is still in development, so we don't have a specific update for you today, nor a specific ask. But we do want to highlight that we are here to support each other in Wyoming's vision, and we plan to drive the fight collectively we find ourselves in. Now, from a 30,000-foot view, we have three key areas we believe we need to attack to achieve the overall SPDI vision. This will be a two-way street for communication, and we will work with the Division of Banking and anyone else interested in joining us. So in full transparency, these are not my ideas, but I did, it's a term we use in the military at least, so tactically acquired some notes from my colleagues. So you'll hear from Ms. Julie Fellows. I'm sure she'll echo a lot of the things that I'm about to say, but three key terms that she brought up last year was to promote, educate, and collaborate. And I think we'll need to work together on a disciplined approach to that, as the government will be uniquely positioned to attack certain areas, whereas we, the SPDIs and the partners and even academia, will be uniquely positioned to go after other opportunities. So on the, on the promote side, just real quick, we need to promote each other, the awareness of what's happening in the industry in general. Successes, educate our folks that are interested, our investors, our customers, everyone that's like, what is this thing, this SPDI, and why is it so important? And obviously we want to recognize the accomplishments that, Wyoming has achieved. And then on the education, it really needs to be at every level of industry, government, and academia. So I got to hear the University of Wyoming, some of the initiatives that they put together. Also, the University of the Cumberlands has been doing some work in blockchain education. So that's really exciting to me from everything I do. And so I'd like to congratulate them for the leadership that they're taking. And I look forward to seeing some really interesting things on maybe in my other uniform as well. And on the collaboration side, that's a difficult one. What does that mean to collaborate? We know that it's a situation where a rising tide lifts all boats. But at a minimum, there's some folks that want to collaborate with us, like the Satoshi Action Fund and external groups that are saying like, hey, how do we help? And so we just need to collectively get together and figure out what that means, maybe what it means, what the government believes it means for us. So there's, like I said, there's a lot of stuff we need to tackle. And so there's no doubt there'll be some heavy lifts ahead, but I'll end there. I want to thank you for your time. You know, we continue to be motivated by this opportunity in Wyoming and excited to keep getting after it. So thanks again, and I'm happy to take any questions.
I thank you, Mr. Slater. Members, any questions?
Mr. Chairman.
Representative Singh, go ahead.
Thank you, Mr. Chairman, and Mr. Slater for being here today. You said that the American banking system is in a competition. Would you mind saying who some of those players are?
Mr. Slater, please go ahead.
I don't know that I want to necessarily get into because I don't have the necessary facts. There's some things that we believe to be true, and then we are watching the general industry. Now I can say that we've talked with a significant number of community banks, and on the community bank side, I think it's kind of like, let's wait and see, right? And so I think that the opportunity that we bring to the collective SPDI, bring to the smaller banks, I'll say, is something that they're not aware of that allows them a stronger foothold, a stronger presence against the incumbents, I'll say.
Representative Singh, follow up.
Yes, Mr. Chairman. Mr. Slater, do SPDIs exist in other banking systems?
Mr. Slater?
I don't know that exists. I know there are other states that are pursuing very close to SPDI type. They're looking to bring in custody and they're looking to bank, you know, these digital assets for sure. So I think was it Connecticut just recently revived one of their charters. I think it's specifically to come after this market. But I don't have a list or anything on hand right now. No.
Representative Singh, follow up. Mr. Slater, I did see that Connecticut has it, and I believe that one of their banks did receive a master account, if I'm not spoken, which I find peculiar. But anyway, Mr. Co-Chairman or anyone else? Or Mr. Riddell, go for it.
Thank you, Mr. Co-Chair. I think I'd like to ask this of each of the speedies that are here, but I'm curious if there are any market opportunities for speedy banks now, short of having a Fed master account, and whether there is anything that we can do with our existing legislation to enable this sort of interim market opportunity to be taken advantage of prior to that master account being granted.
Mr. Slater, please go ahead.
I'd like to.
Or
Turn
Mr.
that to
Parsons.
the- yes, sir.
Yeah, absolutely.
That's a great, Mr. Chair, that's a great question. And it's something that we've been toying with. We did have a conversation with Ms. Long about it last night. In that, is there a possibility to, the other states have got a state master account, that's in the Satoshi Action Report, that's one way. Does the state want a state bank? That's another potential way. Could we set up as a sort of fintech? We would still need to partner a company for payments in and then use stablecoin for our payments. So once the Wyoming stablecoin is up and running, that's another potential way. And I keep using the word potential. But after speaking to Ms. Long last night, there's a lot of these opportunities that she's gone through, and I'm sure she's going to let us know a little bit more later.
Mr. Riddell, follow up.
Yes, thank you, Mr. Co-Chair. I'd like to just go a little bit deeper on the comment about the Wyoming stable token being something that could be utilized. Just curious how that, what that might look like and whether there's some way that we can help facilitate.
Mr. Parsons, go ahead.
Thank you. Mr. Ravel, our plan with our custody platform, you can take in stable coins. And so we could take in if we were open, we could take in USDC now. Then we could provide wallets for each community bank. And under each community bank wallet, we could do the equivalent of FBO accounts. So it is possible and subject to the desire of the community banks. It's just the potential at the moment. But the technology and the capability is there. And then if obviously our preference would always be to use a Wyoming stable token first, if that was up and running.
Mr. Bell, follow up? Mr. Parsons, actually, for the committee's edification, could you maybe just elaborate a little bit more on that and that idea and how it would conceptually work?
Yes, I'm happy to. I have started discussions with Anthony Apollo, director of the stable token, but it's at very early discussions. So a community bank, you could give them a cryptocurrency stroke stablecoin wallet, and you can also give them, as a bank, a wallet for digital records, which is tokenization. So the community bank could choose, if their clients wanted this type of capability, they could choose to send their clients to Commercium, or they could choose to go through their own wallet. And so if they're at a high level, the bank, Community Bank X would have their wallet, and under that wallet would be their own clients.
Thank you very much, Mr. Parsons, for elaborating. Any further questions, Mr. Co-Chairman?
No, it's.
Any committee members for the Commercium folks? Thank you very much. Please do stick around just in case we have to call you back up here.
Thank you.
Sure. Thank you.
Let's see. I did, Mr. Co-Chairman, I apologize, break a little bit of decorum by not allowing state agencies to go after proceeding, but do you want to go now or Mr.? Mr. Co-Chairman, what do you think?
Well, Mr. Chairman, I was thinking the same thing, actually. I know that he wants to provide a little bit of context on some of the changes, and I think that benefits those that are going to be speaking about them. So I agree, we probably should have brought up the commissioner, and that was a little oversight on our part.
Mr. Co-Chairman, when we get so excited to talk
know.
about the feds
We
up
just
here,
want-
so,
Want to hear from the Speedy Bank?
it was not a diss to our division of banking, I promise. Commissioner, please go ahead.
No problem. Again, Jeremiah Bishop. Yeah, I'll just work through these proposed changes real quick, and then if there's any other comments after the other institutions get up and talk, we can answer any follow-up questions. No, I believe David did a really good job running through this. Him and I had worked on this during the interim period, or during the actual session period. As far as the actual conversion piece, a lot of that was taken from I think it was the voluntary dissolution portion of our law. And it's basically, what does an SPDI have to do to cease banking operations? They already have trust powers. They already have custody powers. How do they shut down the actual deposit taking activity? And that's kind of what what drove this discussion. And a lot of it is that plan of basically plan of conversion. And that's what us as the division would be looking at, is how are you going to cease deposit taking activities as far as customer notices, making sure they know that their bank is closing, and giving them an opportunity to move those deposits elsewhere, and then getting rid of those actual assets and liabilities, being the deposits of the customers, in a timely manner, and then making sure that they're at the time bank is no longer conducting banking business, at which point they can then convert into a trust company. The other piece, I think, is, again, this is a policy discussion. I think David decided on possibly both, is who should be approving this. Traditionally, the banking board approves or denies trust company applications. This piece, I think, does it one of two ways. Either the banking board can elect to do the same process that they currently do to approve a trust company, or they can delegate that to myself on an expedited basis, although it's still 90 days, so it's not that expedited. Again, that 90 days is mostly actually making sure the institutions cease banking operations. We could probably review the actual business plan fairly quickly. Again, these are companies we're familiar with. If they're operating, we're doing regular examinations. So we're not doing the initial investigation like we traditionally would with a brand new company. So I think that part is definitely expedited. But I think that's just a little bit of background on what would be expected in that plan of conversion. And then the last piece being, once you're converted, no longer being able to call yourself a bank. And that would be a multiple step process by the institution, going state by state, making sure that their Secretary of State filings do not include the word bank, and not only our state, but every other state that they're registered in. I did want to go to the next section. This is stuff that we had, I think, recommended or brought to you all as interim topics. The first one is the changing to the capital. I just want to make sure this is not actually changing the actual capital amount. This is just a technical accounting change to make this consistent with traditional banks and trust companies. The prior wording was that you had your 5 million in capital stock and then surplus to cover 3 years expenses. The way accounting should work is that should really be undivided profits. That's all this is doing. And then you have your 20% surplus. So this is exactly how it's set up for traditional banks. And I think it will remove a few steps once an SPDI becomes operational. Undivided profits, that's where net losses are charged to. The way it was that you don't have basically a pre-funded undivided profit, so you must take that out of surplus. Well, that's considered permanent capital. That requires our approval to decrease. And then if you do, there's various restrictions on dividends until that's paid back. This kind of removes those, I think, possibly unnecessary steps. The whole point of that 3-year operating expenses is to just pre-fund basically your operating expenses, because it does take some time to actually have a positive net income. So this isn't changing the actual required capital. It's just shifting it from one capital account to another. The other section, this was something that we had done in co-chairman's office. Thank you for pointing out the $5,000 minimum. That's something we had brought up, but we thought it might be more of a discussion. But just overall, this is not, I don't view this as actually changing who an SPDI can take as depositors. When the original language was drafted, I believe there was a prohibition on them banking natural persons. It was business only. However, there was an amendment, I think a year later, kind of providing a back door into providing deposits accounts for individuals, as long as it was, incidental activity, but within the incidental activity list is deposits, as long as it's tied to basically custody. So SPDIs can currently bank individuals. This is not changing that. This is just making it clear that they can do that. There has been, ever since that amendment, I think it was in 2020, there's been some confusion from, I think, existing SPDIs, but also potential SPDIs that we meet with regularly are confused by this, of whether or not they can bank individuals. We believe they currently can. This just makes it very clear that they can. But then as far as the minimum $5,000, that was more of, I wanted to bring that forth as a discussion of what was the, I was not involved when this was drafted. What is the reason for that $5,000 minimum? And should that be reviewed? Again, we have had some potential SPDIs who saw concern with this. Their business model, it may have been businesses, but small businesses who don't want to wrap up $5,000. So again, what was the purpose behind this? One of the things that $5,000 does do is it provides a buffer for overdrafts. Currently, SPDIs cannot give loans, and that includes overdrafts. So that does give that buffer. However, currently that's up to the depositor really. How does it, like, maybe some of the actual bankers may be able to talk about this. What controls can the bank put in place to make sure that their depositors don't fall under 5,000? If they do, that's a violation on the bank side. So it's more of a discussion. Do we want to keep that? Is that a good idea to keep, or lower it, or get rid of it entirely? But I also want to point out that if it is removed or lowered, you do run the risk of having a double violation of overdrafts. So a potential fix would be to allow certain types of overdraft for short periods of time.
Yeah, Mr. Co-Chairman, you go first.
So from the overdraft standpoint, I remember that discussion years ago. If we were to eliminate Romanet 3 completely, then there's no statutory provision for a minimum. But it's my understanding a SPDI could effectively set up their own internal, we'll call them policies, but operating agreement with their customers to say that we require $1,000 minimum balance. Otherwise, there will be a service fee, as all of our financial institutions often have things like that for various accounts. Is that correct? I believe that's accurate.
Mr. Bishop?
Yes, Mr. Chairman, Mr. Co-Chair. Yes, I imagine that's what the SPDI would have to do to make sure that they do not ever allow an overdraft. And that's currently what they're going to have to do with this 5,000 minimum. They're just going to have to set some type of monitoring system in place in agreement with the customer and make sure that they're not in violation due to the customer activity. If you were to remove this entirely, that it's the same concern, just with a lower threshold.
Right. So, Mr. Chairman, it almost seems like whatever number we have here, the sound policy is that they have to add $1,000 to this X value so that they don't lead themselves to violation space. And as a result, I think that almost obviates this, that you would want us to provide the flexibility for their sound practices. Is that fair?
Yeah, Mr. Chairman, I think that would put that decision to the institution. What level are they comfortable with? And removing the actual statutory requirement of a minimum. I mean, there's still a minimum of 0 because they can't have overdrafts. But it gives, I might say, a little more flexibility into what type of depositors they have. And then what level are they comfortable with as a buffer before having an overdraft. But I think it puts that a little bit more control into their hands.
Mr. Chairman.
And next question, what happens if they do have an overdraft, even though that's a violation? What is the remedy for that? So let's say they have their $1,000, so they've got a good policy in place, but somebody thinks they're writing from one account, they're writing from another account, end up doing a $2,000 payment, and all of a sudden it hits that wall. What happens next?
Mr. Bishop.
Yep, Mr. Chair, Senator Roth, the same thing as with the 5,000. It's a technical violation. We would go in and we would cite that as a violation of law because they're not allowed to have overdrafts, even though it may have been their customer's action. It's still a violation of the company. Now, what we do as a supervisory side is, okay, is this a one-time? Was there anything the bank could have done to have stopped this? Is it happening with all their customers, in which case it's a systemic problem, in which case we'd probably criticize their policies, or was it a one-time instance and they corrected it? That's going to happen. I guarantee every SPDI is probably going to have an overdraft at some point. Even if this 5,000, they're going to drop below that 5,000 at some point, in which case we're also going to cite that as a violation. Current traditional banks, I equate this to it's called Rego. There's restrictions in place for a director having a bank account at their own bank. There restricts the amount of overdrafts that person can have to not less or not more than $1,000, not more than 5 days. Banks have things in place to make sure that their directors don't violate that. However, it does happen, in which case, yeah, we look at it. Is this a one-time thing, or is it a actual problem that needs to be addressed?
And Mr. Chairman, I remember when we were talking about this years ago, struggling with this a little bit, not coming up with any alternative solutions, but maybe something has come along. Maybe there are some ideas that we can provide. That this concept is based on the fact that we don't allow the provision of credit, and an overdraft is effectively that. Would there be some other internal vehicle that a SPDI bank could utilize where they, I mean, it still sounds like it's probably a provision of credit. I don't know how to work around that concept, but anything internal that could block that using their own internal assets. I don't know what that would be. They'd almost have to pay for it themselves, which is not going to be a favorable policy. They'd probably rather take a violation. But all right, anything come to mind that we could allow for that would not be an extension of credit, but would provide an opportunity to remedy this?
Mr. Bishop, please.
Mr. Chair, Senator Office, I can't think of anything that you could do to really stop that extension of credit from happening, except for making sure they have some type of buffer in place.
Yeah.
And then we'd look at their accounting systems as well. That might be something that they could do with their actual system, just not allow it. But then that may have some unintended consequences of timing of funds or availability of funds.
Well, we didn't come up with anything last time either, Mr. Chairman.
That's why a good discussion. I'm not sure what the answer is, but maybe open it up to maybe the SPDI to see if they have a
exactly.
good
All right.
fix on that.
Thank you, Mr. Chairman. That's all I had on that.
Co-chairman, we're good at going in circles
Yeah.
sometimes.
Revisit the oldies.
Mr. Bishop, actually, before I go, is there any questions from the committee? See none, or yeah, sure, go ahead, Mr. Revelle, please.
Thank you, Mr. Co-Chair. I just want to ask the same question of the commissioner with regards to the speedy legislation, whether there are current market opportunities or demand that you might see that you think that we could put in place today, and while we are awaiting access to the Fed master account.
Mr. Bishop, go ahead.
Yeah, so Mr. Chairman, Mr. Rebel, I'm not sure of anything at this point that would really make it easier for what we could do at the state level to ensure they get a master account. That's a federal discussion, and those are federal requirements. So we can do what we want to. At the end of the day, the federal agencies are going to do what they want to. No, so I can't think of anything to make, to allow an SBI to take advantage of an opportunity that they don't currently have the availability to. But I'm always open to good ideas.
All right. Any further questions for the committee? Mr. Bishop, just for maybe to elaborate a little bit, you're talking about just, well, let's start from the beginning. How would you define overdraft, broadly speaking, and certainly in this context, because I'm not sure if I'm on the exact same page as you are on that.
Yeah, Mr. Chairman, overdraft is if you have a savings account, checking account, and that goes negative. If you have, as soon as that, you have $50 in your account and you spend $100, you have a $50 overdraft. That's an extension of credit of $50.
Which is what I thought it was, Mr. Bishop, I guess, which is a little different, if assuming I'm reading this correctly, that, you know, a bank can set the policy clearly statutorily, if say $5,000, they can go under that. There's still liquidity, there's still money in the account, and there's just a technical overdraft on their books. You said they get double penalized for that. Did I understand that correctly?
Mr. Chairman, what my example was, right now they have they must maintain a minimum of $5,000 in that account. So if you're a deposit customer and you go down under 5,000, that's a violation of that law of the SPDI. If you then, let's say you have $5,001 and you spend $5,002, you're in violation of both statutes at that point. One, the violation of the 5,000 minimum, and also you've given a $1 overdraft, which is a separate provision of law. So you now are violating two laws with
Right.
this one transaction.
For which a speedy would technically be extending temporary credit, which obviously not supposed to do. Okay.
Yep.
Thank you for that. Kenny, any questions for Mr. Bishop? Seeing none. Co-chair, do we want to keep discussing the bill and take testimony on that, or we want to let these speeds jump back in and weigh in? Co-chairman.
Mr. Co-chairman, I think it's probably a good time to go back to the speedies and continue that path, and then we can work the bill at the end, as well as have an opportunity for the commissioner to come back up and maybe provide additional thoughts.
As usual, don't go too far. Let's go ahead and we'll hop on.
I see we have both.
On Zoom. Let's go ahead. Ms. Fellows, are you ready to hop in, or do you want Trevor to go first?
I'm available and ready to go.
Okay. So Ms. Fellows, as the protocol is, of course, announce who you are and who you're with, and always just address questions through the chair, please. So proceed.
Thank you. I'm Julie Fellows. I'm co-founder and CEO of Bankwise. Are you guys getting a feedback?
We can hear you just fine.
Okay.
Please proceed.
Great. So thank you for having me today. I'm excited to speak to you. And, I think the Select Committee on Blockchain, members of Wyoming Legislature, and others have invested significant time and effort into creating a robust digital asset infrastructure. It has the potential to create enormous value for the state's economy, as well as benefits broadly in the U.S. and globally. The thoughtful legislation and regulatory framework you've created right now is the gold standard in the U.S. And Wyoming's leadership in digital assets, the Web3 space, is well recognized. It was helpful hearing Sheila Warren present yesterday, where she noted Wyoming's excellent and innovative work. However, there's a need for support from Wyoming to ensure that all the work that has been completed results in the benefits anticipated. There's a window of opportunity, and I believe that it's a critical time to do this now. I spoke about this last year. We have follow-up discussion in November where my co-founder Justin Culver also spoke about doing some more outreach type of activities on the state level. And so I'm speaking for Bankwise specifically, but as members of Commercium spoke about, I think all the speedies really want to see our efforts come to fruition and to grow the digital asset economy in Wyoming. Wyoming has demonstrated its leadership in creating the legal and regulatory infrastructure, which is the foundation. Now, the opportunity for leadership by Wyoming is through other activities that have not yet been carried out. And that is in being very proactive and supporting the broader acceptance of your creation. So what we're asking Wyoming to do is promote, educate, and collaborate. A little differently than Mr. Slater suggested, I'm suggesting that Wyoming promote the fabulous work that's already been done and do this outside of Wyoming at industry conferences and other events. Spread the word so that others better understand the benefits of the infrastructure you've established. We continue to get questions from investors and others as to what are really the benefits? Isn't it just a trust? And so I think more discussion and promotion will be really helpful there. Educating others, and that includes educating state regulators, federal regulators, and lawmakers on the thoughtful and robust regime you've created. This will help them to gain a deeper level of understanding and comfort with moving forward in allowing the SPDIs to have access to master accounts, and collaborate with others to help ensure that SPDIs receive the benefits and the reciprocity across the US that is so deserved. This isn't a small endeavor, and yet it's critical to Wyoming's ability to enjoy the benefits of the efforts already invested. So I recognize that this will require resources and dedicated effort, and it's not a part-time role of somebody who already has a full-time job. And so I know I suggested this in prior discussions. So today I'll offer to work together with other leaders from the SPDIs as well as this committee to identify appropriate individuals and how we move a budget and resource process forward. Thank you.
Thank you very much, Ms. Fellows. We really appreciate that testimony. Committee members, any questions, Ms. Fellows? Mr. Ravel, go for it.
Would you ask that question for me? Of all people going forward, you want me to ask it each time?
You asked.
Okay, thank
I
you. Thank you,
think,
Mr. Chair.
You are, Mr. Ravel, you are particularly articulate with that question, so
I really
you take
appreciate
that one away.
Appreciate this opportunity to have the microphone. Ms. Fellows, thank you very much for your comments. Same question that we've been asking the prior presenters. Is there anything that we could do here with legislation that would help provide an opportunity for you to meet some market demand that is, short of having a Fed master account, but providing other capital markets services?
Ms. Fellows?
Thank you, Mr. Chairman. Mr. Ravel, that's an excellent question. I have been thinking about it as you asked it a little earlier, and I don't have a specific answer right now. I will continue to think about that. So legislatively, I don't think so, but I'll think about it. And then I do think, though, one thing to think about is that each of the SPDIs really has a different business plan and model and different risk profile. And I would say that if we can move forward on helping others to understand the different risk profiles, how those risks are mitigated, either because of the structure of the regulatory regime and or oversight, or within the individual institutions, again, I think that is really going to move us forward.
Mr. Valley, follow up?
No, thank you.
Ms. Co-Chairman?
Thank you, Ms. Fellows. Thank you for being here today, and thank you for the discussion on the outreach and marketing and bringing that forward at the end of last year and into this year. Mr. Co-Chairman, I think this is something that we really have to focus on. We talked about it one other year a little bit, trying to find ways to do some outreach. We weren't particularly successful at that point in time, but we need to do a better job. And, this is something that I think we should put on the agenda for the June meeting and focus on it, get the Wyoming Business Council involved, get the Wyoming Business Alliance involved, get stakeholders like Ms. Fellows, the rest of our SPDIs, the rest of our folks throughout the state that have been advocating for the same thing, and come up with some real solutions and actually start doing some work on that particular outreach. And one thing that we could potentially do before then, and I'll ask Ms. Fellows if she wants to participate, others may as well, is put together a little working group on this and figure out, what are the 5 things that we could do that would be meaningful as the first steps, and then start doing some of those things, figure out what resources we need to accomplish it, and maybe we can start dividing up the work amongst stakeholders in this room and throughout the state, get the business council involved. They do have resources, and I know that they're happy to work with us on this. We've had a lot of good interaction with them, but haven't had that conversation recently. So I'd like to hear your thoughts on it as well, but I think we need to respond to Ms. Fellows, and we need to get that going.
Ms. Fellows, wouldn't you agree?
I agree.
Ms. Fellows, or is there any other questions for Ms. Fellows? I've got one. In just maybe the simplest terms possible, walk us through your business model as a bank at a high level, and how some of the recent litigation or court decisions rather have impacted that model.
Well, so our MVP, or where we're going to start is really pretty boring, providing banking services to customers in the industry that right now we know are really struggling to even find banking relationships, integrated with qualified custody for digital assets and access between the two, both digital and fiat payment rails. So really it's robust onboarding where we're vetting the customers very thoroughly before we onboard those clients. We use regulatory technology to ensure that all the transactions are monitored and that we are not facilitating any type of transactions that are concerning, and really just providing that safe, integrated banking and custody solution for customers in the space. And that our focus is not on providing these services initially to consumers, but business to business.
So, Ms. Fellows, it really sounds like these recent actions by the Federal Reserve have fundamentally jeopardized your business model. Is that a fair assumption?
Well, certainly it is very difficult to provide the services on the banking side. And that honestly, that's the special sauce of the SPDIs, right? The fact that it's integrated banking and qualified custody of digital assets. So I would say, yes, it's concerning that the Federal Reserve has not been able to work together with those appropriate to forward actions. And I think that there's a combination of things happening with what happened in 2023 in the market. Investors were very concerned, and so forward movement in the space was prohibited, really. And I think that lacking, bringing the Federal Reserve into an entity that's just ready to open the doors, we haven't had that opportunity yet to show them our robust risk management program. And so there's a little bit of a chicken and egg there.
Thank you, Ms. Fellows. A follow-up question would be, we heard from Mr. Parsons at Commercium, and that like any small startup bank, you need money, right? To get things going and to fundraise. And it sounds like they were in a pretty serious pinch because of what the recent decisions have done in that capital raising environment, or the ability to go to these investors or potential investors and raise money. Are you also kind of in that same spot?
Yes, I will say that is a regular question to say, well, can a SPDI get a master account? And certainly it has caused concerns for investors.
I can appreciate that, Ms. Fellows. That's got to be, it's really tough. Obviously, raising money for any company at any time is a pretty serious obstacle. And when you've got the omnipotent Federal Reserve standing in the way of that, that's got to be very daunting. And I really sympathize with the situation that the Federal Reserve has put you in. You know, another follow-up would be, what has your, tell me about your experiences with the Kansas City Federal Reserve and that specific branch.
Okay. We began having discussions with the Federal Reserve Kansas City branch last year. And quite frankly, the conversations were positive, and we agreed to have open discussion as we went through the process. Unfortunately, we are at a position now where we can't progress any further in the process until we are able to raise more capital.
Sounds like our federal partners are not being particularly helpful. And Mr. Co-Chairman, one last follow-up, and I apologize for chewing up the committee's time. Do you feel like the Federal Reserve understands your business model and all your conversations with them?
I think that they are willing to take the time to understand our business model and our specific risk profile and our really robust regulatory risk management program that we are building out. So I think that I have infinite hope that they will sit down across the table and work with us. And I really believe that they showed the intention to do that. I think where it's been difficult is with the state of Wyoming joining in the lawsuit. I think it was more difficult, for example, for Commissioner Bishop to be involved in those discussions. So typically, I think it would be helpful to have our primary regulator, the Division of Banking, collaborate with us as we're having those discussions, or separately in discussions with the Kansas City Fed as they get comfortable with, how is this risk being addressed? And what does the regulation say around whatever area it is that they're concerned about?
Well, thank you committee members, any questions? Seeing none, thank you very much for your time. We really appreciate it. Please do stick around just in case. We've got some more testimony. We've got this bill that we're working, so stick around just in case.
Okay, thank you. Thank you.
Let's go ahead. And is Trevor, are you out there? Can you hear us? Are you
I'm
ready
here. Can you hear me?
We got you loud and clear. Trevor, just for the decorum of the committee, just announce who you are, who you're with. We'd love to hear what you have to say.
Yes, sir. My name is Trevor Rutar, and I am the CEO of Kraken Financial. I want to thank the committee this morning for the opportunity to testify. Since receiving our charter in 2020, we have worked with the Division of Banking and an array of stakeholders gathered here today to bring Kraken Financial to market. I applaud, much like the other SPDIs, this committee and the state of Wyoming for your continued forward thinking and making Wyoming a friendly place for digital assets. I've attended every Wyoming blockchain stampede and hackathon since its inception and enjoy seeing the continued industry engagement across the state and industry. For those not familiar with us, Kraken was founded over 13 years ago. Since then, we have steadily grown into one of the world's leading global digital asset businesses. We are proud of our roots as a Bitcoin exchange, but are equally driven by the societal and economic value that is developing well beyond financial services. Blockchains are transforming the way we consume goods and services, secure data, and deal in property rights. These are areas the state of Wyoming and Kraken have been equally interested in advancing. Kraken identified Wyoming early as a place that was working to define the regulatory environment and enable this industry. And we have been active in the state. A few examples are donating $300,000 to support the University of Wyoming's efforts in the digital asset powered economy. We sponsored Cheyenne Frontier Days and a pirate cowboy combination that seemed to work. Many passing through Cheyenne love seeing our Kraken mural downtown. We continue to sponsor the Wyoming Congressional Award to help Wyoming's youth grow into the leaders of tomorrow. And this year, we're delighted to co-sponsor the blockchain conference event in Jackson with the University of Wyoming and SALT later this year. We have an office in Cheyenne and we employ folks across the state. And many of our clients ask questions about Wyoming and have looked to Wyoming as a place to do business. We were the first to get an SPDI charter and work diligently to operationalize our bank, officially launching in the first quarter of this year. Kraken Financial offers a deposit product, allowing eligible clients to keep and move fiat in a fully reserved bank account. We also have a digital asset custody product that currently supports BTC, ETH, and USDC with more asset support on the way. We applaud Commissioner Bishop and his team at the Division of Banking for their thoroughness in exams, their responsiveness to inquiries, and thoughtful approach to rule implementation. As has been pointed out, we continue to face numerous challenges outside of Wyoming. One of those challenges is the patchwork regulatory framework with no clear licensure requirement across jurisdictions. We continue to engage with states to get recognition as a bank and for the SPDI charter. Nonetheless, we have launched. Our ability to do so is a testament to the work of this committee and the state of Wyoming's commitment to being the frontier of the next wave of innovation, not only in the U.S., but across the globe. I'll conclude my comments by anticipating Mr. Ravel's question, and that's market opportunities that we see. Lots of versions of custody, I would say, trading, tri-party collateral agreements, potential staking integrations. Those are some opportunities that we're looking to take advantage of. We've been working and discussing with Director Apollo of the Wyoming Stable Token Commission on how we can partner that initiative and bringing the Wyoming Stable Token to life. There is the potential for an SPDI to issue a stable token. However, this is a long, bumpy road, and we're watching developments in Washington, D.C. to see what that will actually look like. And that concludes my opening statements. I'll stand for any other questions that the committee may have, and I'll stay on the line to discuss amendments to the SPDI framework. We do have some recommended ones in addition to what Commissioner Bishop has put forward.
Thank you very much, Mr. Uttar. We really appreciate your testimony. Committee members, any questions for Mr. Uttar? Well, oh, sorry, Ms. Co-Chairman, please.
Thanks. And Trevor, we really appreciate having you here as well. And I do look forward to hearing the suggestions for potential Speedy Bank revisions. That's something we're looking for. You know, I think it was probably 5 years ago here in Jackson, we were working with Kraken, might even been 6, talking about early Speedy Bank discussions and trying to come up with some of these concepts. So we appreciate the work that you've contributed over the years. Outside of Speedy Bank, are there any other issues that Kraken sees where a state legislature such as the Wyoming legislature can affect significant change in a positive way, something that you and Kraken might be looking for based on current circumstances? Obviously, we're constrained by the feds in many ways, but we have a lot of authority in certain areas. And is there anything that comes to mind that we should have on our radar?
Mr. Uttar?
Mr. Chairman, the state of Wyoming has been very friendly in this space and has been forward-thinking, the commissioner as well, in outreach to other states. Most of our battles, to be frank, are on the federal level in fighting those. Recognition of the SPDI amongst other states is probably one of the things. So as Julie Fellows and others have testified this morning, this consortium that we put together or a working group to advocate that recognition of the SPDI across states, that will go a long, long way for us to get recognition as a bank and the SPDI charter.
Mr. Co-Chairman, follow-up?
Great. No, that's helpful. Thank you.
Real quick, Mr. Chairman, I want to ask you the same question I asked Ms. Fellows. What have your experiences been with the Kansas City Fed?
Thank you, Mr. Chairman. So we have had many discussions with the Kansas City Fed discussing our business model, our plans, our risk assessments, risk mitigations, controls, etc. Those were put on pause sometime in late 2022 when the Fed's tone seemed to turn from educational to a little bit more adversarial. And that's about the time when Custodia's lawsuit was moving forward. And so we took the stance to wait and see what would happen with that. We have not been denied our Fed Master account. And as of the end of April, the outreach from the Kansas City has picked up a little bit, perhaps being emboldened by certain lawsuits.
So, Mr. Tur, if I follow up, did I hear correctly that they've taken an adversarial attitude? Did I catch that correctly?
Not as open dialogue as we've had in the past, but they have not denied our Fed Master account as of today.
Sounds like they've kind of got you waiting in no man's land, which is not exactly very helpful or pro-business. Mr. Co-Chairman, any other questions? Okay, I know we've got some other folks who really want to testify, and we've got a lot going on, but please do just stand by as we continue this discussion. Ms. Long is now okay.
Thank you, co-chairs and members of the Select Committee, for asking me to testify today. I'll discuss 10 learnings relevant to the future of Wyoming Speedy Banks at the Fed, gleaned from publicly disclosed documents in our lawsuit or my direct knowledge, and then will recommend an action step for the state. Custodia Bank currently provides US dollar banking and money market fund services, as well as segregated Bitcoin custody services to business customers in 32 states. We have an office in Cheyenne and 36 employees. We are operating with two hands tied behind our back, not just because the Fed denied our master account and disparaged us publicly, but also because because without a Fed master account, we must rely on partner banks to clear US dollar payments for our customers. And this has proven anything but durable. For context, it's well documented that federal bank regulators have been pressuring banks to debank digital asset companies as part of Biden's all-of-federal government attempt to kill the digital asset industry, other than the ETFs. And there's data to support this. While only 3% of American banks service financial technology companies, Claros Group found that those 3% of banks received 50% of the FDIC's enforcement actions last quarter. 3% got 50% of the enforcement actions. Wyoming businesses have faced debanking like this before during Operation Choke Point from 2013 to 17. Indeed, during a hearing about the original Speedy Bank bill draft in 2019, one of your former House colleagues testified that his business had been debanked, and he voted for the Speedy Bank bill to ensure Wyomingites had a way to fight back against politicized DC bank regulators abusing their power. I'll return to the debanking issue momentarily, but here are the 10 things learned about the future prospects of Wyoming Speedy Banks at the Fed. Number one, the Wyoming legislature reached an agreement with the Fed in December 2018 to recognize Wyoming Speedy Banks, and the Fed broke that agreement. Multiple documents uncovered in discovery refer to the existence of that agreement and show how much the Fed really, really wanted it. At the time, the lawyer for the Wyoming legislature told us that the general counsel of the Kansas City Fed called the Wyoming legislature to demand removal of a provision from the draft Speedy Bank bill, requiring the Wyoming Attorney General to sue the Fed if the Fed didn't give master accounts to Wyoming Speedy Banks. She said that the issue had already been litigated and the Fed did not want to litigate it again. The legislator sponsoring the Speedy Bank bill agreed to remove that provision from the draft legislation in reliance on the Kansas City Fed General Counsel's representation that the Fed would open master accounts for chartered Wyoming Speedy Banks. Point 2, discovery confirmed that once the Fed and the Wyoming legislature reached that agreement, the two groups started meeting weekly to develop the Speedy Bank program. They met more than 100 times total. Discovery also confirmed that Wyoming officials had good reason to expect the Fed to grant master accounts to chartered Speedy Banks on a timely basis, which comports with what then officials of the Wyoming Division of Banking told me in January 2020, that they met with then Kansas City Fed President Esther George in her office, and she told them that, quote, she did not want to get sued again, and she promised to run an open and transparent master account process for Wyoming Speedy Banks. We know from discovery that did not occur. Point 3, Speedy Bank's Fed master account applications languished, and in May 2021, it became clear why. The Fed in Washington, D.C. suddenly changed the rules for master account access. Lawsuit discovery revealed the Fed in D.C. drafted the new guidelines largely in reaction to Wyoming's Speedy Bank initiative. The Fed took 15 months to finalize those guidelines, which relegate all Wyoming Speedy Banks into third-tier status, which means dead end, as confirmed by various internal Fed documents disclosed in discovery. For example, one of them said no for Tier 3. In those guidelines, the Fed is acting outside its authority by granting itself a veto over state bank chartering decisions for the first time in U.S. history. Point 4, in January 2023, the Fed announced its denials of Custodia, and discovery revealed what led up to that. On November 11th, 2022, FTX, the fraudulent offshore crypto exchange, filed for bankruptcy. Up through November 18th, 2022, a week later, evidence confirmed that the Fed was still discussing restrictions to put on Custodia's master account, i.e. things were still proceeding. But a few days later, right before Thanksgiving 2022, staff at the DC Fed held a meeting with Fed Vice Chair Michael Barr to discuss Custodia. Days later, the first draft of the Custodia denial letter appeared. In other words, the DC Fed decided to deny Custodia 2 weeks after FTX failed. Ironically, months before FTX failed, I arranged for evidence of probable crimes committed by FTX to be delivered to the FBI. Shame on the federal government for shooting a messenger who tried to stop that horrific fraud. Point 5. Before announcing the Custodia denial in January 2023, the Fed used aggressive press leaks to try to intimidate Custodia into withdrawing. A reporter told us that the Fed's board would deny Custodia 2 days before the Fed's board actually voted. This is among 23 violations by the Fed of its own policies and procedures during Custodia's application process, which are detailed in a now public document we filed with the Fed's Inspector General. Point 6, multiple insiders came forward to tell us that the White House orchestrated the hit on the digital asset industry, including the denial of Custodia. And one insider gave us the name of the White House official who coordinated it. A few days later, Illinois Senator Dick Durbin attacked Custodia by name on the U.S. Senate floor. No one at Custodia has ever met either that White House official or Senator Durbin. This was all political and all coordinated. Point 7. Incumbent bankers have lobbied to stymie certain Wyoming blockchain initiatives. You, as elected officials, of course, already know this, but here are 2 new facts uncovered by discovery. A now public chat log confirmed regulatory capture of the Fed by the large banks. Fed staff drafting the Custodia denial letter consulted a misinformation-filled blog about Wyoming Speedy Banks sent to the Fed by the lobbying organization for America's largest banks, encouraging the Fed to block Wyoming Speedy Banks. Unfortunately, the Fed listened. B, the now retired CEO of a Wyoming bank that has been particularly public about its opposition to certain of Wyoming's blockchain initiatives and who was on the board of the Kansas City Fed, showed up in handwritten notes of the then Kansas City Fed President Esther George, revealed in discovery. I'm not permitted to say more about this at this time. Connect the dots. To be clear, we're grateful for the support Custodia has received from many individual banks who see where the world is going. But other banks and their lobbyists have hurt us and Wyoming. Because in addition to influencing the Fed's denial about Custodia and hamstringing this select committee's efforts to bring jobs to Wyoming, they harmed a material revenue initiative for the state. How? Wyoming Speedy Banks pay a 2 basis point annual fee on assets under custody. Indeed, all Wyoming businesses pay a 2 basis point annual fee on their assets except for incumbent banks, which are exempt. There's no difference between the supervisory fees paid by incumbent banks and Speedy Banks. We all pay the same. But again, only the Speedy Banks also pay that asset-based fee. So stymieing the Speedy Banks hurt that revenue stream to the state, and the amount of lost revenue is not small. Point 8. Discovery revealed the truth about Custodia and cleared our good name. The publicly disclosed assessment of Custodia by the Fed was negative, but privately, Fed staff actually viewed Custodia positively. Here are just 3 of many 180-degree flip-flop examples disclosed in court documents. Strong risk management became significant risk management gaps. Impressive and extensive management team became lack of a collective depth of relevant banking experience. And adequate capital became lack of a robust capital management framework, capital requirement framework. With every passing day, it becomes clearer that the Fed's public order about Custodia was a political document. We knew the Fed's disparagement of Custodia was combat tactics, trying to intimidate us to quote unquote go away. Yes, that was in discovery. So I asked one of the insiders who came forward, why would the Fed do this to a good actor like Custodia? And he explained that in the post-FTX interagency power struggle in DC, the Fed was at risk of losing jurisdiction over stablecoins to the Securities and Exchange Commission, which was planning an aggressive move against digital assets at that time. So the Fed used Custodia as a sacrificial lamb to prove its bona fides and catch up to the SEC. Members of the Select Committee, the Fed used Custodia and Wyoming Speedy Banks as expendable pawns in a DC power game. Point 9, 3 new facts relevant to the future prospects for Wyoming Speedy Banks obtaining Fed access have come to light. A, more than 400 Tier 3 entities have Fed master accounts. Last year, the Fed was forced by Congress to disclose a database of who currently has master accounts, and it confirmed what we suspected. The Fed previously approved many Tier 3 entities, more than 400. But when Wyoming entities came knocking at the door, again, after holding more than 100 preparatory meetings with the Fed in DC changed the rules on us. B, the Fed's database lists 32 applicants to which the Fed has assigned the Scarlet Letter Tier 3, including the 4 Wyoming Speedy Banks. Tier 3s come from 10 states and territories, so Wyoming is far from alone. But the Fed is stonewalling the Tier 3s. Quote unquote, they just don't want to do it. Julie Hill, the incoming dean of UW Law School, told American Banker recently regarding why the Fed is now suddenly blocking access for Tier 3 applicants. Custodia tried literally everything to break the impasse. We tried to climb out of Tier 3 by applying for FDIC insurance and to become a Fed member bank, but found both avenues politically blocked in DC. We proposed a revised business plan, but the Fed never even responded to it. We completed a punch list the Fed gave us, but the Fed ignored us on that too. And these are just a few of the many things we tried. Nothing worked. The Fed forced us to litigate. C, finally, the day after the district court released its opinion in our case, the Fed's Inspector General suspended his investigation into the Fed's master account practices. Point 10, a politicized Fed is a risk to existing banks everywhere. not just to new applicants like Speedy Banks. Recently, the Fed quietly closed a slew of existing institutions' master accounts in Puerto Rico with no recourse to those banks or to their customers. That hasn't happened in Wyoming yet, but law firm Davis Polk warned of this in its analysis of our case's district court opinion. Quote, tomorrow the term novel charters might be expanded to include providing traditional banking services to other politically controversial groups, such as gun advocacy groups, gun manufacturers, payday lenders, pro-choice or pro-life advocacy groups, LGBTQ plus groups, religious freedom or freedom from religious groups, or even fossil fuel companies. They're right. No one is immune from a politicized Fed that believes it can close any bank's master account for any reason without judicial review, and which ignores congressional oversight over master accounts and whose own inspector general won't investigate. Wyoming's first congressman, Frank Mondell, a rancher from Newcastle, warned about the Fed during a 1913 debate about its creation. Quote, not only is its power, authority, and control vast, but it is of a character which in practical operation will tend to increase and centralize. Mondell was spot on. And here's a fact newly made public in discovery that shows just how prescient he was. All you Fed watchers listening online, this is news. The Fed created a loss-sharing agreement between the 12 regional Federal Reserve banks beginning January 1, 2016, not long after the Fed first asserted power to deny master accounts. The point is that this is all coordinated, all connected, and it's a big power grab by the Fed in DC. Here's why this matters. The Fed's framers in 1913 did not want centralization of power at the Fed in DC. They wanted federalism at the Fed, dispersing power among the 12 separate regional and mostly autonomous reserve banks, Wyoming within the Kansas City district, in order to protect against the siphoning of credit and wealth to New York and DC from those of us in the heartland, and to reinforce the states as equal power to the federal government in the dual banking system. But the 12 Federal Reserve banks quietly lost that separation and autonomy in 2016. They functionally now share only one balance sheet at the end of the day, controlled by Washington, D.C., by a politicized Washington, D.C., I might add. Next, here's my recommendation. The state of Wyoming should immediately apply for its own Fed master account. The state of Texas has a Fed master account, so why not us? Texas went further and set up its own securities custody account at the DTC as well. A spokesman for Texas recently told American Banker, quote, direct access to the Fed and DTC saves the state millions in fees that would otherwise be paid to commercial banks for those services. I estimate Wyoming, too, could save millions in fees and should do the same. Finally, back to the debanking topic. It came out during discovery that federal bank regulators privately applied regulatory pressure on Custodia's partner bank, which resulted in the closure of our bank account due to no fault of our own. And that happened again recently, again due to no fault of our own. Debankings are costly, enormously disruptive internally. One of them had impacted 1.5 million lines of code. And they set us back many, many months. So the Speedy Banks haven't yet solved the debanking problem for Wyomingites. But the fight is far from over. From the very inception of the United States, the states have had power to charter banks without needing permission from Washington, D.C. It is time for the states to reassert your power. I'll close by thanking the Select Committee, the Wyoming Legislature, Governor Gordon, and Senator Lummis for your support. Thank you also to the Wyoming Division of Banking and to the fellow Speedy Banks for everybody's hard work on this. It is far from over, but we are up for the fight. Thank you.
Thank you, Ms. Long. That's a very passionate testimony. And I think certainly myself, my co-chair in this committee really does understand and sympathize with the fight that you're in. yeah, I think at the end of the day, this is about financially empowering people, right? I mean, through all this and all the regs and all the technicalities and all that stuff, I think that's what this really comes down to. And that's why I ultimately deeply respect all the efforts by Speedies to do just that. And so it's incredibly, at the end of the day, it's really just saddening to see, folks who are putting their own money, their own intellect to work and getting blocked by people who are supposed to be helping us. Obviously there's I've got my own questions, but I first want to open up to the committee or Mr. Co-Chairman. Was there? Representative Ian, go ahead.
Thank you, Mr. Chairman. Ms. Long, and this has been really comprehensive and very interesting, so thank you for your testimony. Far be it from me as a state representative from Wyoming to really understand the machinations in DC, but I think it's plausible what you stated with this power struggle between the Fed and the SEC. And I think that you are caught in the middle of that, and so I'm very sorry about that. You have also indicated that there was someone within the White House, so within the administration, that was helping organize with the Fed. So would you say that the administration is also choosing sides between the Fed and the SEC, or how do you think? So I'm trying to understand that interaction between the administration, the SEC, and the Fed, and how that they all want to cover crypto or not cover crypto.
Thank you, Mr. Chair, Representative Yin. I don't have the direct knowledge of this. As I said, multiple insiders came forward, and one of the insiders was very specific about this power struggle. It's now widely acknowledged. But what he shared with me was that in the wake of FTX, and by the way, when we heard Mr. Rutar's testimony earlier, that the Fed turned hostile at the end of 2022, that lines right up with what happened to us, right? The discovery showed that they were still talking about what restrictions to put on Custodia's master account through November 18th, 2022. And the experience of Kraken Bank was that was about when the Fed turned hostile. So it's all connected. There were a lot of details that this person shared and direct knowledge of what happened. And there were a couple of others who put other puzzle pieces together, but here was the punchline. What they alleged is that this White House official locked arms with Marty Grunberg at the FDIC and Gary Gensler at the SEC. And they decided to make the aggressive move against crypto after FTX, that the pro-crypto elements of the Biden White House had been, for various reasons, there was a power vacuum. Some folks had left, there was a transition for others to other jobs, and all of a sudden there was this vacuum and this White House official locked arms with those two people. Marty Grunberg has been in the news a lot lately. He just yesterday announced that he will be stepping down as FDIC chair. What is interesting about that is he is known as Choke Point Marty. Marty Grunberg is the person who started the original Operation Choke Point, and he got confirmed to be chair of the FDIC. So he's back in that seat and he's at it again. Now, what will happen now that he's announced he will no longer be FDIC chair? How long will he stay there? How long will it take for the Senate to get someone else confirmed? He said he's stepping down as soon as his replacement comes in. We don't know. But so you notice that among those three names I just named, the Fed's not there. That was the point. The Fed was perceived in this scrum, according to this insider, to be pro-crypto. And they went first in what is now clearly an all-of-government coordinated crackdown on the industry. It was very confusing to us at the time because we thought it was about us. And we couldn't believe all of the heavy-handed tactics, including the intimidation, using the press to try to get us to withdraw. They really just wanted us to go away. I mean, literally, that is in the discovery. So we just couldn't believe it. It's now crystal clear that this was an industry-wide issue, and arguably especially the most law-abiding companies were targeted by this. It was a shoot the stallion to scatter the herd strategy. And the Fed went first precisely because they had to prove their bona fides, according to this insider. Yeah, it is insane that the federal government works like this. We are supposed to have due process. the state of Wyoming, as a state in the United States Republic, has more power than the Federal Reserve, but the Federal Reserve does not recognize that.
Representative Yin, follow up? Mr. Co-Chairman? Or no, sorry, Representative Singh, my apologies.
Thank you, Mr. Chairman. And thank you, Ms. Long, for what you've shared with us today. Just as an average citizen, how is it that something as fundamental as my right to associate or my right to speak freely about myself, how is that put at risk by what's going on far away in Washington, D.C. with the bankers? I'm thinking about, the situation that happened in Canada with those folks that were driving around. That was concerning, but is that really what I'm confused?
No, Representative,
Ms.
Mr.
Long,
Chair.
please go ahead.
Yes, thank you, Mr. Chair, and Representative Singh, thank you for your question. That is exactly what that Davis-Polk analysis is pointing out, that the Federal Reserve certainly believes that there are no restraints on its ability to close bank accounts. We've experienced this in Wyoming with several significant banks leaving the oil and gas industry. And that has posed some serious problems for oil and gas companies in Wyoming. The representative, your former colleague in the House, who talked about his business being debanked, was one of those targeted industries, not oil and gas. So we've had experience with this. And the whole point, why he was so passionate about the Speedy Bank Charter was that this was a way for the state to be able to participate in the US dollar payment system without having to ask for permission. And if you look at the history of the dual banking system, the states and the federal government have equal power. It's always been that way. And so until the Fed created these guidelines and gave themselves a veto over state bank chartering authorities, there always had been a way for a state to say, we want our bank to be able to bank our controversial industries. Now, the Fed is taking the position that it has unfettered, non-judicially reviewable, non-congressionally reviewable, and non-inspector general reviewable power to take those bank accounts away from banks. This will be abused. Absolute power is already being abused, absolutely. And it's not just the party in power right now I'm concerned about. I'm concerned about this much concentration of power being abused by whoever is in control. Because for whatever reason, banking has become one of these cudgels that has been used to try to put political adversaries out of business or throw sand in their wheels. I don't personally believe banking should be politicized at all. You want to fight over social issues, you do that at the ballot box, not through a bank account. But unfortunately, it's very clear that a politicized Fed is using its power to target an entire industry here.
Representative Singh, follow up?
Thank you, Mr. Chairman. Yeah, I recognize that there are far-reaching implications for things as wide as being able to purchase ammunition to being able to freely practice your religion, and I'd hate to see undue government involvement in any of those things.
Committee members? Mr. Co-Chair, I'll go after you.
Thank you, Mr. Chairman. And Ms. Long, thank you. And thank you for your long service on this committee as well. You were part of all of the original work that created not just the task force, the select committee, the Speedy Banks, and now you're fighting a good fight, and we really appreciate it. Thank you for that. And wish you didn't have to fight so much, the good fight, but here we are. I do have a couple of questions and want to understand a little more on the recommendation, which I think is very intriguing and something that we have talked a little bit about but haven't explored deeply. What's the structure in Texas that they ended up setting up for the master account? Did they create their own state bank, or how? What is the vehicle for the master account that they possess?
Ms. Long, go ahead.
Thank you, Mr. Chair. As Senator Rothfuss, the tax authority, the tax collector, so it would be the equivalent of our Treasury Department, is the one with the Fed master account. It was set up in 1995, and they're very open about the fact that it saves them millions of dollars in fees. They are paying wholesale rather than retail prices for payments, and that can be as low as one hundredth of the retail price. That's why it's millions of dollars of fees. But to directly answer your question, because you and I've talked about this before, North Dakota did set up a state bank. What came out also very recently in this newly released database is the state of Tennessee set up a state trust company expressly for the purpose of getting a Fed master account. So there are three different examples of three different structures.
Different structures, exactly.
Correct.
Yeah, okay. Do
Mr.
you,
Co-Chair.
yeah, Mr. Chairman, and we probably need to explore this more and ask, but do you see any particular advantage to any of those three systems when you've contemplated it for the state of Wyoming? It probably needs a good bit of thought if we go down this route, but any preliminary thoughts?
Ms. Long.
Mr. Chairman and Senator Rothfuss, this is going to be interesting because I think the Federal Reserve just doesn't like the state of Wyoming. That's very clear. And whatever we do, I think they're going to meet us with acrimony. So the question is, what's the best approach? Obviously, it would be interesting if, well, you've got the Wyoming Stable Token, which is a project of several of you on this committee. And boy, that certainly would be far better if it had its own Fed master account. And that's happening through the state treasurer's office. So that would argue for the Texas structure. But a way to support the speedies by allowing us to have what's called an OC1 correspondent relationship with a state bank that cuts directly through to a state Fed master account. Boy, that would get what the original Speedy Bank purpose in part was designed to do, which was let's protect Wyomingites against this crazy debanking politicization so that we can always have banks that will bank our politically targeted industries, depending upon whoever is in charge. So that is one idea. The state of Texas disclosed they do not receive interest on the funds that they hold in the Fed master account. I would be interested in if the state were going down in that direction, challenging whether the Federal Reserve has the ability to pick and choose to whom it pays interest among its account holders. I think there are a lot of legal issues that the Attorney General's office could have a lot of fun with.
Mr. Chairman, that was going to
Co-Chairman.
be the next question actually was, and you've specifically referenced an OC1 agreement. I want to explore that a little bit more. And is that functionally equivalent or can it be functionally equivalent to having your own master account if we set up a seamless interaction where the state basically grants, I'm going to call them sub-accounts because I have no idea what the appropriate term of art is, to each of our Speedy banks, something along those lines, and use the state's master account for access. Is that accurate?
Ms. Long.
Mr. Chair and Senator Rothfuss, in theory, yes. This is what is called a correspondent bank or a banker's bank. And yes, they do provide what's called an OC1 correspondent relationship. That allows you to have a cut through. So from a counterparty credit risk, you go straight to the Fed, but you're using someone else's master account and routing number, and you have to pay them for that because those assets will show up on their balance sheet. They have to hold capital against it. So you're not getting the wholesale prices. I think there's a significant antitrust issue with the Fed picking and choosing who gets master accounts because they pick and choose who gets those retail versus wholesale prices. But if the Fed won't give direct access to Wyoming Speedy Banks, that is certainly better than what we have faced, where the federal bank regulators behind the scenes are pressuring our partner banks to close our bank accounts.
And Mr. Chairman, I don't see any particular risk with that. Nothing jumps out at me, but what are the risk concepts associated with that if you take the perspective of the bank?
Ms. Long.
Or the state, excuse me, the state acting on behalf of the banks?
Mr. Chairman, Senator Rothfuss, I mean, it's operating a bank. These would be non-lending banks. And so the market risk would be out of the equation, and that bank would have direct access to the Fed and to T-bills, and could essentially do the Speedy Bank business model, but be the enabling bank that provides access to the US dollar payment system. Yes. I think it would be a farther reach if the state weren't already considering going down that path with the stable token.
Right,
Yeah.
yeah. May already be something that is on the track. So I think that's interesting to explore, and we could talk more about how we would go about seeking that, but I wanted to go and discuss a little bit more about the FTX event and how it seems that might have been the trigger for the decisive hostility from the administration, from the Federal Reserve, and seemingly from everybody else there. The question I have is, and it comes a little bit of a surprise to me, that folks that are theoretically sophisticated in the space would look at FTX and then look at the Wyoming Speedy Bank structure and Custodia and conclude we need to stop Custodia because of FTX. And maybe this is a little bit of an open question, but how could they be so unsophisticated and be in those roles?
Thank you, Mr. Chair, Senator Rothfuss. That is a great question. I will defend the supporters of Custodia and the Wyoming Speedy Banks within the Federal Reserve. There were many, and they got steamrolled by the politicians in DC who were doing the White House's bidding on this.
So you think the action officers do understand that a structure like Custodia or any of our Speedy banks and the regulatory structure that we've built around that, the statutes, the incredible work by the Division of Banking, that structure provides exactly the protection that was lacked in the circumstance of FTX? You think the action officers understand that, but the policymakers ignored it?
Ms. Long.
Mr. Chairman, I think you put it very, very, very well. There were a number of people on the ground who understood exactly the value of this. And it was the politicians in DC that forced the decision to block all of us. There's something also very interesting that has happened since then. The Bank of England came out and announced that all stablecoin issuers are required to have the Speedy Bank's business model. They can't lend because of the risk of bank runs, and they have to be 100% holding cash so that if there is a bank run, that everyone gets paid out and the company can ramp back up once confidence restores. What
a clever idea.
Imagine that.
Mr. Chairman, also there's more. The Lummis-Gillibrand bill, not coincidentally, builds on the Wyoming Speedy Bank architecture and also makes reference implicitly to this Bank of England recommendation that all stablecoin issuing banks will have this exact structure. So again, the folks on the ground, for the most part, not all, but the folks on the ground understood this. And that Washington, D.C. moved so hard against this, calling a non-lending bank that hold 108 cents in cash for every dollar of demand deposits, calling that unsafe and unsound. It's ridiculous.
Ms. Co-Chairman.
Yeah, another line, and I guess this is applied to some degree, but it seems that part of the resistance is always going to go back to the threat to the traditional financial institutional model, which relies on lending and relies on control of the finances, where the digital asset model tends to democratize control of that financial system. Do you agree that that's one of the underlying threats that again, it's a bipartisan feeling of threat that certain institutions are providing resistance to? Is that a fair assessment?
Ms. Long.
Mr. Chair, certainly the incumbent banks. Again, you know everything that's going on. You've seen the public testimony of the bankers here in opposition to the stable token bill and other blockchain initiatives. So what is motivating them? I do not know of a single deposit that has migrated out of a Wyoming bank into one of the Speedy banks. We're not serving the same markets. What is motivating them? We know nationally, there's a lot of pressure on the local banking organizations to toe the line.
So
Co-chairman.
one other area that really wasn't touched on here, because I think you and I and others now understand that it wasn't connected, so it doesn't come down the center of the discussion, but I'm curious at the time whether you perceived that it affected the opinion, and that's the bank failures that were initially blamed on cryptocurrencies and digital assets, because banks affected tended to be favorable towards these digital assets. We know now that, and I think even folks that are deeply involved admit now that it had nothing to do with their custody of digital assets or engagement with digital assets. But how do you think that fed into the fear, uncertainty, and doubt that was triggering the resistance in the administration?
Mr. Chairman, Senator Rothfuss, those bank failures happened after the denial of Custodia. So
Okay.
I don't think they were connected. It is worth noting that there is documentation and discovery of my warning of the Fed of that those banks were at risk of bank runs months before the bank runs actually happened. Again, they shot the messenger.
Great. Thank you, Mr. Chairman.
Mr. Co-chairman.
Go ahead.
So I've got a couple of questions for you. Did I hear you correctly that the Fed believes, the Fed is outside the purview of the United States Congress? Did I hear that correctly?
Yes, Mr. Chair.
Hmm. You know, I find that deeply bothersome and disturbing. You know, as a legislator, I truly believe that there is no higher authority in the land than those who have the consent of the governed. And to think that any institution is outside the purview of the people that are elected by the people, that are sent to Washington or respective capitals around the country to do the bidding of the people and act in their best interests. That's extremely bothersome. At the end of the day, I mean, our Constitution is extremely clear about our co-equal branches of government, and the legislative branch is the one that writes the laws and passes those laws, and of course are ratified by the executive. So I think that we're dealing with an institution that feels that they are outside the bounds of the laws is really troublesome. But a follow-up question I did have was, kind of looking at this, I really appreciate the printout of your remarks. That really kind of helps put all this in perspective. In the timing between the Michael Barr meeting and the first draft of the denial letter, that indicate that Mr. Barr directed the denial letter of the master account, or is there any evidence of that in your opinion?
Mr. Chair, I need to keep my remarks to what I disclosed publicly. There is a hyperlink in the documents. It's filled with hyperlinks to the source documents. So you can look at the emails pertaining to that meeting, but I need to let those documents stand for themselves.
Thank you, Ms. Long.
Mr. Chairman,
Mr. Co-Chairman?
sorry to interrupt, but we can put this testimony up on the website as testimony. Is it
Perfect.
already up? We've got.
As long as that's-
Perfect. So
Yes.
Do we already have a copy of that too? Oh, it is.
it is
Okay.
already.
All
up
right, it's already on.
because,
Yeah.
Ms. Nord is amazing, and
Ms. Nord is indeed
just
amazing.
does those things without us even having to worry about it.
We will
So,
be a boat adrift without
right.
Clarissa.
So all those links and all this material is available on our website, in the meeting materials. Sorry to interrupt, and I will note, Mr. Chairman, that Mr. Pope had.
Yeah. I appreciate that. Ms. Long, another follow-up is, did the Wyoming courts consider this possibility that Mr. Barr could have personally ordered this rejection or the rejection of the application?
Mr. Chair, I can't speak for what was in the judge's mind. His decision is what's public. There was no oral argument and there was no trial.
I want to ask you a question that I asked all the other speedies, which was, do you feel that the Fed understands your business model?
Mr. Chairman, certain people at the Fed certainly did. It is worth noting that the information that they have, they did an examination of us based on information as of June 30th, 2022. It is in our Inspector General complaint that they refused to take any updated information as we were giving it to them during our exam. There was an understanding between the parties that we didn't make it on the first exam. That is not abnormal for a de novo bank. There is one bank that is well known in this country. They got 3 exams. Why did the Fed only give us 1? Good question. Again, it is in writing that they asked us, they gave us a punch list of remediation. That's all out there in public information. And that I'm now testifying that we completed that punch list long ago. But the information that the Fed had was as of almost 2 years ago. They have not asked for updated information since then. They ignored our remediation. They ignored our updated business plan. And once they denied us, the communication stopped.
I appreciate that. I've got a lot more questions, but I know there's some others on the committee that want to dig into this. I think, Mr. Pope, are you looking to ask a question?
Yes, I do, and I appreciate the opportunity, Mr. Chairman. Thank you, Ms. Long, for your testimony. It is very much appreciated. I was on the original blockchain task force, and when we worked the speedy legislation, I remain a proponent of the speedies and the entire concept now. That came upon the heels of the revelations from Operation Choke Point 1.0, and I've always seen the speedies as a solution for not just the blockchain industry, but for any industry under attack, because political winds blow arbitrarily. And can you imagine a world in which there was a new report from the United Nations at the end of 23 that said we should all eat less beef? That would be a personal affront to me personally, because I love beef. But can you imagine then if there were pressure to have the beef industry debanked? That just can't. I mean, that for Wyoming would be horrible, especially for all of the ranchers, and the processors, and but it could happen because it's happening right now in other industries and happened back then in other industries. And so what I would really like to do is figure out a way to strengthen our resolution and our resolve to keep the speedies a viable business platform here in Wyoming, a viable banking platform. To that end, I've got just a couple of questions for you, Ms. Long. I've done a little bit of research into the Texas master account, and it's my understanding that in order to get that account, they had to give up a certain amount of autonomy. That's my first question to you is, do you know in what areas they had to sacrifice that? And then I'll have one follow-up after that, if you wouldn't mind addressing that.
Ms. Long, go ahead.
Thank you, Mr. Chair. Mr. Pope, that's a good question. American Banker reported on the agreement that the Fed asked Texas to sign, and it made references to the fact that Texas had to give up sovereign immunity in order to get that master account. Now, what does that actually mean? That sounds scary. And I don't know what it means because, of course, the contract is not public, and we wouldn't know what the Fed would ask of the state of Wyoming until the treasurer goes and tries to contract for a master account. I suspect, and by the way, as I've looked into this, states give up sovereign immunity all the time. What does that mean functionally? Again, the state in the United States structure is superior to the Federal Reserve. So it is there's dissonance in the notion that a state would give up sovereign immunity to get a master account in the US dollar payment system. But what I suspect it actually means, and probably as far as I would suggest the state would be willing to go, is to provide a guarantee of the funds in that account. And that probably isn't too far afield from what the state does in its normal contracting, where the state would give up sovereign immunity. There would be a guarantee to the extent of the value in that account. And the Fed would have this, I suspect that this has to do with what would happen in the event of a receivership. If there were ever a default on the account and the Fed had to step in and close the account, would the Fed be made whole?
Mr. Pope, any follow-up?
Yes, Mr. Chairman, thank you. Just kind of a two-part question here with that. One of the provisions that we inserted into the Speedy Bank statute was that the Speedy Banks would not have to have FDIC insurance, and that would remove one of the levers of pressure that could be applied to them on the federal side. The first part of the question, would the state have to have some sort of underlying insurance? And second, just kind of randomly, what kind of talent would the state have to employ in order to achieve a master account and be able to actually manage the master account, so that I can get a little bit of an idea of the eventual cost to the state of that sort of arrangement?
Ms. Long?
Thank you, Mr. Chair. And Mr. Pope, in terms of talent, it depends on the extent to which the state plans to use the master account. If the state is operating a bank like the Bank of North Dakota, then it is hiring and building the people to build a bank, and that is not cheap. If it is just running payments through, so you can pay wholesale, not retail prices for payments, effectively the master account would take the place of the state's bank, which I understand is Wells Fargo. So how many people in the state's Treasury Department manage that Wells Fargo relationship? Those folks would be managing the relationship with the Fed master account. I don't know that it would be necessarily that many more people. And then I forgot the first part of your question, sorry.
Mr. Pope?
Thank you, Mr. Chairman. The first part was that we have removed the requirement for a Speedy to carry FDIC insurance. That was done to ensure that one of the levers of pressure that the federal government can apply is removed. Would the state have to carry some sort of insurance on that? And that was the first part of that question.
Thank you, Mr. Chairman. Mr. Pope, yes, on the FDIC insurance, the whole raison d'etre for the Speedy Charter, if you remember back, several of you were part of the fall of 2018 meeting here in Jackson Hole. And there were several people testifying, including, as I recall, Jesse Powell from Kraken, about how this industry just keeps getting its bank accounts closed. And there was this clear pressure behind the scenes by federal bank regulators to debank the industry. And we were trying to solve that problem. And again, just to bring it to the current events of today, Marty Grunberg is chair of the FDIC currently. He announced yesterday he's resigning due to the scandal that has been reported in the paper, and he will be stepping down as soon as the Senate confirms his replacement. He was the architect of Operation Choke Point, of the politicization of banking. So it's a really interesting question. If there is now someone new at the FDIC, are we all now going to get FDIC insurance? And so the answer is you don't have to. As I mentioned, there are 10 states and territories that have these uninsured banks that have applied for Fed master accounts. We are far from alone. We are far from unique. And as I recall, former Commissioner in Jackson in 2018, former Commissioner Faulkner and I had a conversation about the uninsured, he's sitting to my left here, about the uninsured state bank charters. Maine, Connecticut, and Vermont have had uninsured state bank charters since the late 1980s. So this was not a new idea. And other states have copied us since. And Idaho chartered an uninsured bank under its traditional bank statute. And the reason is because they didn't need insurance because they weren't going to be lending. So the answer is that you don't need insurance. The statute, in fact, actually says eligibility for a Fed master account is an insured depository institution or a depository institution eligible to apply for insurance. All the uninsured charters that we're talking about fall in category 2. What the Fed tried to do with its guidelines is engineer it so that we're all, if you're uninsured, you're either a second class or third class citizen. You have the scarlet letter. And so they're trying to your point, Mr. Chairman, they're trying to rewrite what Congress wrote for them in the law.
Mr. Pope, any follow-up?
Final comment, I would not be in favor of a state bank, but a payment master account as described, I believe may be something that we should look closely at. Thank you, Ms. Long. Thank you, Mr. Chairman.
Committee members, any additional questions for Ms. Long? Seeing none.
Mr. Chairman, may I add just one quick thing?
Please go
As
ahead.
I testified during the bill, or during the testimony, the agreement that was struck between the Wyoming legislature and the Federal Reserve Bank of Kansas City's General Counsel to remove the reference that the State Attorney General sue. There was something else I didn't mention, but it may be worth mentioning and you considering. It wasn't just that they wanted that provision removed. They also wanted references in the original Speedy Bank draft to the federal statute that is being litigated, removed from the Wyoming bill. Those references to the federal statute, the Kansas City Fed really cared about. And I would add to my suggestion that perhaps it might be worth the committee's thought to consider putting that language back in to the state statute.
Ms. Long, that was exactly going to be my question, but still my thunder. Mr. Co-Chairman.
And Mr. Chairman, I was trying to look up a draft that had that language in it and was digging back through my email just as we started talking about it. Which I haven't found yet, but I know that we had that original language and then just removed a couple of provisions. There's a couple of ways we can do that. We can talk about it more, or we can either put it back in this statute or getting to the broader point of the concept itself of manipulating what banks can and can't do based on access to master accounts. There's an alternative possibility of just drafting legislation which provides the state with an interest in protecting master accounts for Wyoming state chartered institutions. So that becomes a broader and more applicable concept. Either of those things would, for the case of Speedy Banks and for the case of the court case, be functionally equivalent. But realistically, it may get more broader than that if there starts to be an emphasis on influencing and withholding master accounts just based on other social engineering practices. So we can talk a little bit about that later.
Mr. Co-Chairman, I think that absolutely should be part of an option, certainly for our next meeting. Ms. Long, is there anything else you'd like to add or any other questions from the committee? Not seeing any online. Again,
Thank you.
We really appreciate your testimony. Thank you very much. All right. Let's see, who do we have next? So I think that kind of wraps up some of the specific time that we gave to Speedies to share an update and their concerns with just the current environment. Yeah, I know we're kind of doing two things at the same time between giving them updates and working the bill.
Mr. Chairman, I didn't spell as one.
Or yeah, I did not. Yeah, thank you. Mr. Co-Chairman, thank you. Ms. Fellows, did you want to weigh in before we wrap up this portion again?
Yes, thank you. I actually, as I've been listening and thinking about Mr. Ravel's question about what type of legislation might be helpful, And as you're considering some of the language, I think that Ms. Long talked about that had initially been in the bill. One of the things I would suggest that you consider is that as we look across the states, there's the federal issue and then a state by state issue. And I'm going to specifically call out New York from a reciprocity perspective. And I do think that some of the language of that other states to consider an entity to be a bank require banks to lend. They have specific language and it varies state by state. So I would just suggest that you consider some of those components as you're looking at the language to help ensure that that reciprocity across the US is easier to gain.
Mr. Co-Chairman.
Thanks, and thank you, Ms. Fellows. That is complex. I remember that discussion that we've had it a few times about how we get shut out of reciprocity because our speedies don't lend. That's something that we've deemed to some degree be a feature with 100% reserve capacity. Do you see a way that we can thread the needle? Do you have any suggestions on how we can thread the needle in such a way that we can get reciprocity status in other states that have that as their definition of a bank, but at the same time protect some of the institutions that we put in place for good purpose? What are your thoughts?
Ms. Fellows.
Yes, thank you. I think that is, off the top of my head, I have some ideas, but I think it would be worthwhile in collaborating with legal counsel. And I do know some outside counsel that is especially knowledgeable of the various issues from state to state that sort of trip up or cause us to have to work extra hard on MTLs and that kind of thing. And I have a couple in mind, but I do think because it's very particular to the language. And so I think that it would be helpful to collaborate with counsel.
Thank you, Ms. Fellows. Feel free to send them our way.
I think you know them.
With that, Mr. Co-Chairman, I think we've kind of wrapped up the portion updates from Representative Yin. Go ahead.
Mr. Chairman, yeah, I was just thinking about what, if any, that we bring to our next meeting. I think the recommendation from Ms. Long is actually very intriguing and something that I think the committee should consider. I think getting a master account for the state has three main benefits. We enable Wyoming companies to do business, so not just the speedy banks, right? So if banks start denying or debanking our other industries, having a master account provides us some leverage there. We force the Fed to either give us a master account or we deal with them. So it's not just Custodia fighting the Feds. Wyoming would be able to get into that fight. And then we could save the state money. And I think that might be the biggest selling point for our colleagues, frankly. But I think all three of those are ones that work for Wyoming.
Representative Yin, I think those are great suggestions. And I think that's what a lot of us have been thinking here. Let's wait till the end for committee directives, but I think that's an excellent suggestion. Mr. Vale,
Do we want to take a break?
you look keenly. Let's go Joel one more bite at the apple.
Thank you, Mr. Chair. I thought that the idea of the Wyoming stable token providing some sort of bridge to the Fed master account was particularly interesting. I think that the folks that we have in the room today, and I know that we've got other agenda items, but with the speedies here in the room, with Ms. Long in the room, Mr. Land, our banking commissioner and his team, and former Commissioner Albert Faulkner, and all of you, this could be an interesting sort of idea to workshop a little bit. But I think there's some real merit to that potentially. And I don't know exactly how that bridge or those kind of rails would work via the WST, but and I can't speak for the entire commission as to whether that's something the WST would want to pursue, but that could be a very interesting idea and probably merits discussion.
Thank you, Mr. Revelle. I sense a bill draft request coming.
There might be.
There are just a couple.
Maybe a couple.
You know, it's 10:50. We're a little bit behind schedule, but I think it was worth falling behind schedule. Let's just go ahead and take a,
Mr. Chairman, we'll catch up on trust company reciprocity, I think.
yeah,
Okay.
let's go ahead and just take a quick 10-minute break. We'll come back at 11:02. Larissa, are we live again? Okay. So we gave a little bit of some extra time. I know that was a very substantive discussion, a lot going on there. Yeah, still we have some more testimony on the issue. Obviously, it was half an update on speedies and some of the stuff they've been going through, certainly the roller coaster they've been on. But we also have the pending legislation before us about these conversions. So we let the Division of Banking weigh in on that. Let's go ahead to, I guess real quick, was there anything else you wanted to add before we went to testimony or any questions from the committee members? Doesn't look like it. Let's go ahead to public testimony. If there's anybody in the room, any of the speedies who want to testify on this. Okay. Let's go ahead to in the Zoom world. Are there any hands raised up there? Mr. Meyer, I don't see your hand raised, but I'm guessing you probably want to weigh in.
Look, you raised his hand.
Oh, please proceed.
Thank you, Mr. Chairman. Can you hear me?
I think we can hear you okay.
Great. Thank you, Mr. Chairman, members of the committee. Scott Meyer on behalf of the Wyoming Bankers Association. Just a couple of comments, I think, on the draft bill that the commissioner went over. There's a provision in there that talks about, and I know that Commissioner Bishop brought it up, but regarding the conversion and who can make those decisions, I guess. And it's, as I believe Commissioner Bishop said, that it was commissioner or they could be delegated. And I want to make sure that that is clear in there, that I don't want to overstep the bounds of the Wyoming State Banking Board. If they want to delegate that to the commissioner, I think that's fine. But I want to make sure that they still retain, I guess, the overall responsibility for that conversion. There was some testimony in that bill also talks about the duration. I think that there is maybe some misunderstanding, at least on my part, maybe, but the converting from like a federal charter to a state charter, and we want to make sure that the bank maintains the same duration. And I don't know if that's for insurance purposes or what, but I don't know that I would necessarily agree that if it was converted from a state charter to a trust company, that duration would necessarily be applicable. I think those are two different entities. So I question whether that's necessary or not. There is some talk a little bit about the removal of the requirement for it's only to be businesses using the speedy banks. And so then there's a lot of language being taken out. My thought is that if you're going to open it up to individuals, that's fine. But to the extent that there is a bona fide business having an account with a speedy bank, that I think that you need to leave that same language in there, that that they are validly formed and operating under the laws of the jurisdictions they're required to do. And I think the last thing that I would just point out is I'm not sure why we would necessarily want to lower the $5,000 requirement. I know that in some circles that would be not much, and in some circles that would be a lot. But I think the comments that were made were that that's not required for traditional banks. And with all due respect to the testimony that I heard today, speedy banks are still not your traditional banks. And so I would probably push back a little bit on changing that $5,000 requirement. Other than that, Mr. Chairman, I'd stand for any questions.
Committee members, any questions for Mr. Meyer?
Mr. Chairman.
Mr. Co-Chairman.
Thank you, Mr. Chairman. Mr. Meyer, I wasn't following what you were talking about the time frame difference. You mentioned that it would be different for a speedy to bank or a bank to bank type conversion relative to a speedy to trust, and then suggested that you had concerns about some timeline discussion, but I didn't see quite where in the bill you were talking about or follow that. So could you repeat that and kind of point to the area of the bill that you're concerned about there?
Mr. Meyer.
Sure, Mr. Chairman, Mr. Co-Chairman, I'm pulling up language as I see, but I think that the way that the statute read was that, the amendment was that much like a conversion from a federal charter to a state charter, that the duration of the entity would continue on just because they formed it or just because they converted it. And I'm not sure that that would make any sense if you're going from one entity to another. And I'm looking here real quick to see where.
Mr. Chairman, no, you're fine now, Mr. Meyer. I know what you're talking about now. That's on page 6, the D paragraph beginning on line 14. So I'm tracking with you now. But now you're not sure why it would be the same. Do you see a reason why it would be different? You know, basically, is there a problem with the D paragraph being structured such that the entity is deemed to have been in existence for the same period of time as the Speedy Bank? So basically, you're saying that the clock starts and that you aren't starting a new clock once you become a public trust company, that you get credit for your time, so to speak, as a Speedy Bank. Why would that not be the case?
Mr. Meyer?
Mr. Chairman, Mr. Co-Chairman, I don't know the exact reason why that same duration provision is in there. And now we want to take it out. I think there's just unintended consequences. I haven't had a chance to really delve into, I guess, the reason why that is there, but my guess would be that it has something to do with insurance, whether it's at the state level or federal level, regarding, you know, how long you've been in business and what have you. These are separate entities. And I think that anytime you're dealing with insurance of some sort and you deal with different entities, those, they start the clock over.
Mr. Co-Chair, follow?
Yeah, Mr. Chairman, I guess I'd ask, and we're not going to take final action on this bill today. So I guess I would ask for next meeting to maybe come back with some details, whether you think that consequence is something we need to worry about. You know, it was raised as a possibility. So I'd like to hear if there is a reason, if insurers do care about that, if there would be a difference. I think it would be important to know whether we should take out the D paragraph, where I'd be inclined to leave it in. The concept is they've theoretically had all of the capacity to be what is equivalent to a public trust, but then they've additionally had the banking functionality. You're effectively removing the banking component of the institution and leaving behind the trust company aspects of it. So that trust company has effectively existed throughout that time. The banking component of that entity no longer exists. I can see the logic then behind maintaining its lifetime in accordance with the full operation of the Speedy Bank. But if there are concerns, there would be objections from insurers or anything else, let's explore that and maybe get some hard data on that for next time. Would that be okay, Mr. Meyer, to kind of dig into that more?
Mr. Meyer?
Mr. Chairman, Mr. Co-Chairman, I'm happy to do that.
Great, thanks.
Thank you, Mr. Meyer. Mr. Co-Chair, I think that certainly makes sense. Obviously, insurance is a really important part of this, and we want to make sure that they don't have any concerns with this and they can continue to offer their services. Was there any other public
And Mr. Chairman, one other thing, just to address Mr. Meyer's first concern, on page 4 in the B paragraph, it is my understanding that it reflects the desire of Mr. Meyer that the board in its discretion may allow the commissioner to proceed with approval of an application on an expedited basis without further oversight or approval by the board, or if deemed necessary by the board may require a process consistent with statute, the full process. So I think that's structured as requested, where there is completeness. The board has discretion to either do a full board process or delegate. Is that consistent with the interests that you laid out at the beginning, Mr. Meyer?
Mr. Meyer?
Mr. Chairman, Mr. Co-Chairman, yes, I think that I would agree with you. That's the way that language is. It was just one of those that I wanted to make sure that it doesn't change.
Oh, gotcha. Thank you.
I think, I see,
specifically on the bill.
I think, I see, Mr. Rutar, if you want to chime in, please go ahead.
Certainly, Mr. Chairman. And you mentioned that this is going to be worked in the interim and perhaps proposed at the next committee meeting. I'm happy to submit some of these amendments, but the idea is we do have some suggestions on what could be included for review.
Yeah, please proceed. We'd love to hear them.
All right, so chapter 20 of the SPDI regulation, this is section B. And the description in this area talks about principal operating headquarters being in Wyoming and the chief executive officer and at least one other officer listed in paragraphs above to be in Wyoming a majority of the calendar year. Our amendment is for this, our proposal is for this to just be the CEO and the primary business location and remove the additional executive officers. We are a remote first company, and as is much of the digital asset industry, and the global nature of digital assets requires flexibility and location of individuals.
Committee, any questions for Mr. Rutar? Mr. Co-Chairman.
Mr. Chairman, all I would say is, yeah, things have definitely changed in this space since we wrote this act in terms of remote work. So it's an interesting point.
Mr. Co-Chairman, I appreciate that. I mean, I think it's, it's about striking the balance, right? I mean, I think that was part of it of ensuring that obviously, given the culture that we're in now with the pandemic and work from home, I appreciate that. But at the same time, a big emphasis of the original act was having folks be here in Wyoming, that they are living in Wyoming, contributing to our communities, all that stuffs. But I think at a minimum, let's at least have that discussion on what that would look like on the ground, not just for Kraken, but I think for all the other speeding institutions. Mr. Rutar, was that the only amendment you had? Were there additional ones? There are additional ones, and I'm happy to pause after each one for open discussion or just get them all out there and then have a discussion based on them. Let's take them one at a time, just for the sake of discussion, if that's okay. So please proceed. Sounds good. The next one, Mr. Chairman, is reviewing the minimum balance that has been talked about already. Our proposal is to amend the language as the commissioner proposed so that it's clear who can be a customer of an SPDI, including natural persons. Section D already provides the ability to onboard natural persons, so this cleanup that has been proposed will make this more clear. As it regards to the removal of the 5,000 deposit maintenance provision, our proposal is to remove that. The minimum balance requirement does seem arbitrary, and it's unclear that what this is trying to accomplish or who it may be protecting. Our clients' main deposits well in excess of this, and it is difficult to enforce. That we, as a matter of practice, it was touched on earlier today, so I'll just let you know what we do. We have a minimum balance cushion that is much higher than the statutory requirements so that we don't fall in danger of tripping that. And our method of movement of funds happens to be via wire. So those wires aren't approved to go out until there is verifiable and sufficient funds not to trip that. This I could see maybe being more of an issue of like debit cards were at play and going into an overdraft or a situation like that, but we don't have credit card optionality at Kraken, so that wouldn't be part of the scenario. A couple of potential solutions there are to allow overdrafts for a short period of time or to eliminate the prohibition of lending or allow for like de minimis amounts for a scenario if it was worth consideration. Mr. Rutar, or Ms. Kocher, you go first.
What would a small amount of time be that would allow you to fix it? How long does it take you to know, so to speak? Could it be no overdraft at the end of day, like by close of business on that day, something along those lines? Is that going to be sufficient, or might you miss that? How could we structure that so that it was a minimal allowance that really doesn't violate the spirit of no overdraft, but provides effectively a protection so that you're not violating the law?
Mr. Rutar, go ahead.
Mr. Chairman, Mr. Co-Chairman, it could be a window, say to 24 to 48 hours for correction review and not be in a violation of law. That could allow some flexibility there. I also consider like banking holidays or when the Fed isn't moving money, we would need to think about how that window is structured if happening over a weekend or non-banking hours.
Mr. Utar, one question I did have, I mean, in the instance of digital assets, are you up against the same constraints that your traditional community banks are, in the sense that I have a debit card, I go make $100 purchase, but I only have 75 in my checking account. Obviously that the transaction's instant, but until it pings my account for the money, it can take days. Are you in that same kind of situation with Kraken in the nature of your assets?
Mr. Chairman, not for digital assets. We just custody them. They're an off-balance sheet activity. And if there was a transaction that a client was trying to do on the exchange or with their assets, we just settle with it. So there is no overdraft that would happen within the SPDI.
Committee members, any further questions for Mr. Utar? Please, Mr. Utar, proceed with your other recommendations.
The next one talks about the supervisory fee on assets under custody. So this is Wyoming statute 34-29-104. It was mentioned in Ms. Long's testimony, the 0.2 of 1 mil fee paid for assets under custody. Our proposal would be to grant the SPDI the same exemptions that Wyoming banks enjoy, or to remove that supervisory based on digital assets under custody and use the basic supervisory fee calculation based off the balance sheet.
Committee, any questions on that one? Mr. Utar, please proceed.
That actually concludes the ones we were proposing for today, Mr. Chairman.
Awesome. Thank you, Mr. Utar. We appreciate your suggestions. We'll certainly, can't promise we'll agree, but at a minimum, take them into consideration. Any other questions? Mr. Utar, was there anything else you wanted to contribute as well?
Nope, that's it. Appreciate the opportunity to testify today. And if there's anything else that we can do, please don't hesitate to reach out to Kraken or myself.
Excellent. Thank you. Any other public testimony on the draft? Is there anybody else online? I'm not seeing any. All right, going once, going twice. Public comment is closed. Mr. Co-Chairman, committee, what's your pleasure?
Mr. Chairman, I think we'll move this forward to the next meeting, but maybe talk through some of the suggested changes and see how we want this to look for the next meeting, and maybe we can just walk through and decide as a committee how we want to do things. My first change would be on page 8 to add a repealer to eliminate the Romanet 3. That's something that seems largely supported and not universally supported, but largely supported. I think that makes sense if everyone's comfortable with that.
Mr. Co-Chairman,
drafted that way.
Mr. Coleman, I would largely agree, just kind of listening to the testimony, hearing from some of these folks in Kraken. It's not like they're going to institute a internal policy. They're going to drop that number to $1, right? I mean, you heard Mr. Utar, their threshold's way above. I think these folks want to engage in good business practice, so they're going to set a pretty reasonable sum to ensure they're compliant, and also that that their customers are in the know as well. I think, Mr. Pope, do I see your hand raised up there?
You do. Historical perspective that was put in there, of course, because we were not allowing any type of lending, and overdrafts are lending. Even intraday overdrafts are, which is it means that during the day, if it goes negative, that is outside the law as well. A $5,000 limit does not, or a $5,000 floor on their account doesn't prevent that from happening. It just makes it less likely. So I think that was kind of an arbitrary amount anyway. I'd like to figure out if there's another way to ensure that, or to limit that exposure, because that can be significant, especially when you're talking about collected funds versus uncollected funds and all of the other ways in which that can go negative. But that limit or that floor on the account doesn't, it just gives $5,000 worth of insurance per account. And that's really all it does. And if there's a better way to ensure that, I'd be happy to listen to it. I don't know. Did that make sense, Mr. Chairman?
Mr. Pope, it certainly did. And maybe just for a little edification for the committee, Mr. Bishop, does a bank get dinged if it goes below a balance of zero? Or is it when it goes below the internal policy of the bank? If you could just make a point of clarification.
Yes, thank you, Mr. Chairman. And assuming your question is regards to SPDIs, so a bank may set that internal limit wherever they see fit, depending on the nature of their customers and deposit activity. So if they drop below that limit, that is just a policy exception to their own policy. We will review that, but as long as they're comfortable with that and they have a process for reviewing those exceptions, we are not going to cite anything on that. However, if as it's written right now, if they do drop below 5,000 at any time, even intraday, that is a violation of law.
Thank you for the clarification. Appreciate that, Mr. Bishop. Mr. Co-Chairman?
So while we have Mr. Bishop here, and trying to think this through, other things we can do so that honestly, they just don't trigger violation of law for things that really don't matter to us. I do think that we want to try and remain strict and not allow something that we would call lending. How long would it necessarily, could we write a provision that would say it would be provide an allowance where you're not violating law if it's corrected intraday, for example, or within 48 hours? Or would that still be deemed lending? And I'm trying to kind of thread the needle here so that we're consistent.
Mr. Bishop, yeah, Mr. Chairman, Co-Chairman Rothfuss, I think if you want to make sure that there are no overdrafts allowed at all, then you need to make sure that they do not go into a negative balance at any time. So at that point, you can either have a higher or a threshold, but maybe it's lower than 5,000, and then have a time period to correct it. So for example, I'm just making this up, $1,000. If you want to lower it to $1,000, and they can drop below 5,000, but they must have that basically corrected within 5 days. So for example, I mentioned that that's actually the threshold for traditional banks, Reg O lending, is they can't, it's an overdraft of $1,000, and it also cannot be outstanding for longer than 5 days. So a potential fix would be, again, I don't want to create the arbitrary amount, but give a time period for the bank to correct it. And so then we would then look at just the timing of that. So if you dropped below that threshold, but you were able to contact the customer, they could refund it back to the threshold on day 2, that would not be a violation. That is currently used in traditional banking overdraft rules right now. So that's something we're familiar with.
Gotcha. So
Mr. Chairman?
Mr. Chairman, then the possibility of changing this from maintaining at 5,000 to coming up with whatever that language is specifically, where it's basically maintaining at 1,000 and for more than 5 consecutive days or something along those lines. I guess that would probably be the structure for it, dropping not less than $1,000 for more than 5 consecutive days.
Mr. Bishop?
Yeah, Mr. Chairman, Senator Roth, I think that would make it easier for the banks to comply with, because it, again, whether or not they drop below that 1,000, that's really on the customer. And that would give the bank a certain time period to correct that potential violation, rather than having it being an immediate violation because of what their customer did. I think that would help out their operations, I'd say, significantly. Now, whether or not, yeah, it's 1,000 or 5 days, that's up to you all, but I think that would help.
I think that for 5 business days makes sense. David, do you get that? And we can maybe work on the language there. But the concept of $1,000 for more than 5 consecutive business days.
Yeah,
Mr. Pope has his hand up.
yeah. Mr. Co-Chair, I think that makes sense. I know obviously Mr. Rutar asked for 48, but nothing wrong with giving them extra cushion.
Yeah,
Um,
they're
but-
not lending at that point. They still have to, if they would have to drop below 0 to
Right.
be in a lending state. That's what we want to
Right.
avoid. So.
Mr. Pope?
Thank you, Mr. Chairman. And one of the things that I'd like to add is that what we're looking at is trying to avoid kind of multiple violations of law with one act. With that, because you've got an anti-lending violation and you have a violation of law in I think in Senator Rothfuss's description, if they would fall below the $1,000. That I think maybe a clarification. I would be okay with that, but maybe a clarification that it is really one instance of violation as opposed to two. And I'm anxious to hear what other folks feel about that as well. But the thing we also have to remember is we're talking a potentially uninsured institution. And that's why we have all of these guardrails in place. So if we can clarify that, if we can make sure we are still protecting the bank and the customers, then I'm good with even $1,000.
Mr. Bishop, did you want to weigh in or Mr. Pope, was that directed towards Mr. Bishop or just a general statement?
That was a general statement, and I'd also like to hear Mr. Bishop's comment on the fact that even then, if it does fall below the 1,000, is that a violation of two laws or two sections of the law? How would the banking commission treat that?
Mr. Bishop?
Yes, thank you, Mr. Chairman. So some what if scenarios, let's say it cannot drop below $1,000 minimum balance. And if it does, it cannot be beneath $1,000 for any longer than 5 days. So a hypothetical, you drop down to $500 and you immediately get it back up on day 3 to 1,000, that's not a violation. If you bring it back up to 1,000 on day 7, that's past the 5 days, that's an apparent violation of that statute. Now, another hypothetical, you actually do have an overdraft. You go past the $1,000 threshold and you also go negative. That is automatic. That will be an immediate violation of the overdraft. But then if you can get it back up over 1,000 within 5 days, you would avoid that violation. So you would still potentially have 2 if you have an overdraft. I think from the sounds of it, you don't want to get rid of the overdraft provision at all. So if you have an overdraft, that's a violation regardless of how long it's overdrafted. But you'd give the bank 5 days to avoid the second violation still.
Yep, that's how it would be.
Representative Singh?
Thank you, Mr. Chairman. This is a question for Commissioner Bishop. Are banking institutions within themselves already implementing policies that require even more than $5,000 for holding an account?
Mr. Bishop? Mr. Bishop, please.
Thank you, Mr. Chairman, Representative Singh. So to make sure I understand the question, does an SPDI currently have a policy in place to ensure that a customer has more than $5,000 in their account? If I understand that correctly, yes, they do. I think they at this point they have to. Since it's a violation to drop under that 5,000, they need an internal policy buffer to make sure there's no violation. What they set that at is up to them. But yeah, I think it's a best practice to set up to avoid a violation to have that policy minimum set.
Follow?
Yes, Mr. Chairman, and thank you, Commissioner Bishop. I guess the idea that's floating around my head is if the Speedy Banks are internally setting their own standards for how much can be held in an account, then why is it that we need to put a number to it at all?
Mr. Bishop?
Yes, thank you, Mr. Chairman. Representative Singh. I think that was kind of the initial question of what does that minimum $5,000 really accomplish? And I think it was a built-in buffer to avoid an overdraft. I think that from the sound, I think it was Mr. Apollo, that was his testimony, was the original language was put in there to avoid overdrafts. They do not want this to be a lending institution. And that was an arbitrarily made up number to make sure that a buffer to make sure there's no overdrafts. So it really depends on which one is, I guess, would you rather have a violation of due to an overdraft or this threshold? I think that's up to you all and which one you want based on what risk are you trying to avoid.
Well,
Thank you, Mr. Chairman. I guess I would just value the institution, the Speedy Bank's ability to enforce its own policies.
Committee, any further discussion on this specific proposal within the bill?
Now we'll have more chance to chat about it, so.
Yeah, Mr. Co-Chair, my
draft
kind of
it in.
thought is, I think, hey, look, I think the question we're simply asking is, can we trust these speedies to set the appropriate policies to ensure that certainly no overdraft happens? I'm comfortable with that. So, if it's absent any objection, hearing none, let's go ahead and include that for carry forward to next meeting, if that's okay. What was the next? What was it? Balance.
Mr. Chairman.
Mr. Co-Chairman.
The first request, let's see, I think it's the next one
Was it
that was
the
here, was talking about
physical location? or-
physical location, limiting it so that it's only the CEO that's required and that others could potentially, the CEO and bricks and mortar, but others could potentially be remote. Let's get that drafted and talk about it. I'll have to give it some thought, honestly.
Yeah, it makes me, I'm a little hesitant, but for the sake of discussion, I think
Yeah.
it's probably warranted to, again, absent any objection from the committee members. Or Mr. Bishop, please.
Go ahead.
Thank you for allowing me to, I know it's not public comment, but the exact
We like
section.
it, so we'll let you comment.
Okay, thank you. The actual statute of the law requires just the CEO to have basically principal place of business of the SPD. The reference as to a second executive officer, that's actually not in statute, that's in the rule.
Oh, okay.
Just for clarification, so.
Well, thank you very much, Mr. Bishop.
So I have that noted.
Pointing that out. I mean, maybe we can just add that as a topic of discussion rather than actually including it in the draft, or Mr. Co-Chair would.
Well, if it's not in the statute, yeah,
Yeah, it's kind of.
It's gonna be hard to remove from the statute.
Yeah, draft statute specifically, prohibiting this or allowing it. Yeah, I kind of have mixed feelings, but let's, absent any objection, let's include that as a topic on this.
Let's
for
give
carrying forward.
Let's give that some thought. And one possibility would be to try to aspire to that, but recognize and maybe even provide the possibility of an allowance if they do have a remote working policy. We all know what our intent was, which is, don't have a Speedy Bank in Wyoming and then build your headquarters in another state. If your policy, your business model is such that you don't have a different headquarters in another state, your people are all across the country. That is different, and that's a very common model. I don't think we want to discourage that model. So maybe this is something to reflect on through the rules and find a way to be more flexible for the circumstance that's suggested.
I think, Mr. Co-Chairman, we all need to get with the times, as they all say. But at the same time, I think I want to see the numbers, right? Like, does this mean we're going to have potentially 10 less people, 50 less people? I think that's the kind of stuff that I would be wondering about. In terms of the idea of eliminating or greatly amending the supervisory fee, I appreciate the concept, but Mr. Co-Chairman, at this time, I'm not comfortable moving forward with that provision, but obviously I'd be interested to hearing the committee's thoughts. Mr. Co-Chairman.
Well, Mr. Chairman, I think I'd be fairly enthusiastic about equalizing the fees by adding them to our traditional banks, the 0.2 of a mil.
Mr. Co-Chairman, is that a motion?
I don't think I'm going to do that at this time, but I would be quite happy with that. I think it is an equity issue, and I think we treat it badly. Maybe that's something we can talk about. What does the rest of the committee think? It's a short bill draft.
Mr. Revelle.
Thank you, Mr. Chairman. First, let me disclose my conflict on this one.
Appreciate that.
Yeah. So as owner and CEO of a trust company that custodies digital assets, we do pay a fee for to the Division of Banking. So would benefit from a lower fee. That is my disclosure. There's the one bit of context that I think is worth understanding is that when while we would always support the funding being available for the Division of Banking, and it's necessary for the proper oversight, and that's good for our industry and it's good for the state. When this was first contemplated, I'm going to really overgeneralize here, but just to make the point, the average custody fee that was being charged was maybe around 100 basis points, and the cost of goods to provide that custody was maybe around 50 basis points. So you were netting 50 basis points of profit roughly, and 2 basis points was not a bad thing. That was probably cut in half about the time that we were getting going, and it's been cut in half again, and now it's more like 25 basis points is probably market, and our cost of goods is still about half that, call it 12 and a half. So we're netting about 12 and a half. So a 2 basis point regulatory fee is getting to be pretty significant. And that would be about equal to our entire cost of goods on traditional assets. You know, like we're custodying stocks, bonds, whatever. If you look at our entire cost of goods, it's a couple of basis points. So that is going to create some issues for folks in the industry as time goes on and margins continue to compress and make it somewhat anti-competitive for the state. But that's, you know, yeah, just to give you some context on that. And let me finish by saying we do support funding to the division, and it's really necessary for the industry and for the state to be successful too.
Mr. Chairman.
Mr. Co-Chairman.
So, Mr. Chairman, and I don't know whether we want to take action on this point, but I do appreciate that analysis that the pressure is kind of increasing on those 2 points, because we don't want to see those discourage innovation in the state. When that was established, the concept as we were putting it together was we really have to have something in it for the state, so to speak, from a revenue standpoint. And we don't have, like other states do, a revenue model based on income, based on profits, based on gross revenue, based on anything else. So this concept was the proxy for, all right, well, here's something that's in it for the state to actually have Speedy Banks here. And it is relatively unique to certain assets, certain classes, and it's not there for other classes. Like our state chartered banks don't have that. So it wasn't just about, even though it stays with the banking commissioner, it wasn't just about that. The concept as we were drafting it was, at some point there'll be a surplus in the banking commissioner's office, and then, like we do with the Secretary of State's office, we would start diverting that special revenue back to the general fund and paying for services with it. So I guess what I would ask is, if the 2 basis points as a structure is a bad structure, what would be a good structure? And we don't have to answer that right now, but I think that's what has to happen. It can't simply be, all right, well, this is going to go away. And again, I think we have to have the same conversation about our banking institutions. They pay property tax, but they really don't pay any additional taxes on their assets, their revenue, their holdings, or anything else. And if we want to use financial technologies in the state of Wyoming to diversify the economy in a way that's beneficial to the state, we do have to contemplate revenue, and we should be doing it in whatever the best way is for industry, so that it's the least. And again, if you're coming up against this as a constraint, then that's demonstrating that maybe this is not the appropriate path. So nobody likes this conversation, but it might be one we want to have. And I don't think we should take any action at this time.
Yeah, Mr. Co-Chairman, I certainly appreciate Joel's comments on this. I mean, you know, any service you provide, of course, comes down to how much it's going to cost you to provide that service. And that's always kind of the benchmark of, you know, of cost-based pricing. Part of it was also as was originally enacted in Senate File 125, was that a goodwill token towards the division, and I think towards the state, about, hey, saying, hey, we want to contribute. And I think the co-chairman's point about parity of, well, all the other banks don't pay this, but the specific type is a really valid concern, right? I mean, fairness is a big concept of guiding concept whenever we talk about any issue in the legislature. I think at some point it probably is warranted. I do think so. Given the headwinds that we're going through right now as an industry, timing is everything in life. And the merit is there. I just don't know if the timing is. That's kind of where I'm at. Unless there's any committee members that object, my thought would be to let's just kind of let a sleeping dog lie for now. Perhaps in 25 or maybe 26, and just kind of hopefully we can get some clarity in the unstable seas that we're going through right now. So absent any objection, we're just going to let that one lie and proceed with the draft as proposed. And I think, Mr. Co-Chairman. Yeah, go ahead.
Just
Mr. Co-Chairman.
one last thing to chime in on, though. I would certainly like to understand what models would be preferable. And we know that we've done this in other places where we end up setting up a revenue structure that seems reasonable, but it turns out that the revenue structure in and of itself holds back innovation in a space based on the structure of revenue. So, and we didn't anticipate that, but it proves to be true. And literally achieving the same amount of revenue for the state, you can change the structure of how the revenue is paid. State doesn't see any difference. Industry sees a tremendous difference. And that's a victory for everyone. So if those alternatives are out there, I don't know what they are. I have no sensitivity to what is and isn't a workable revenue structure. So those that know more can perhaps make those suggestions.
Yeah, Mr. Co-Chair, I think it's a good point. We want to ensure that we can be competitive as a state. And so I think that this conversation might not be now, but it certainly warrants in the future. I think that wraps up some of the suggestions that we had for our conversion. Was Mr. Co-Chairman, am I missing anything? I don't think so.
No, I think that was it for the bill.
So now that we're sufficiently behind schedule.
Mr. Chairman. That was
Mr. Hopkins, please.
just procedurally, I know it's extremely obvious that the committee is taking this up, but could we get a statement absent objection or otherwise that this will be taken up as a committee bill?
We'd be more than happy to. So absent any objection,
We're not voting on it.
we are not voting, just to proceed to the next meeting. Correct.
Yep.
Yeah, absent any objection, let's just go ahead and proceed with this for consideration at our shared meeting in July. Excellent. Okay,
Mr. Chairman?
Mr. Co-Chairman. We're about an
So
hour and
we've
15
got
minutes behind.
the three other issues. No, we're not that far behind. Are we?
We are. I think the
Oh, okay.
reciprocity discussion was at 10:45, and so.
Gotcha.
Or Jill, do you want to?
It'll be quick. We still had the idea about the other discussions that we had related to Speedy Banks. Do we want to contemplate bill drafts on those now, or do you want to talk about those over lunch and then do those later in the day?
Yeah, Mr. Co-Chair, my inclination was to, as we're wrapping up for the committee directives, to tackle some of those.
Okay, sounds good.
Yeah. Mr. Bell, would you rather just try to do this now and maybe delay lunch, or does the committee want to go to lunch right now? Seems, all right.
Mr. Co-Chair, yeah.
Mr. Bell.
Well, I think this would be fairly quick conversation,
Yeah.
and I do have a conflict at 12:30. That will
Okay.
take me out of pocket for a little while.
Sure. So yeah, I guess.
Let's do it.
Yeah, let's go ahead and let's proceed with this discussion. Mr. Ravel, take us away.
Okay, thank you, Mr. Co-Chair. This topic has not a real clear answer. This topic has more puts and takes for you to consider, and that's the reciprocity between states for state chartered trust companies. And the origin of why I discuss this is that there's a sense that companies who are setting up to do business in digital assets are not choosing Wyoming for kind of a couple of significant reasons. Right now, to set up in the absence of a bank charter, companies are setting up public trust company charters, and then because there is a not kind of interstate banking permitted with trust companies as there are with banks, companies need to go out and get money transmitter licenses in all the other states where they're doing business or soliciting business. And it's very cumbersome, and they spend a lot of money and a lot of time going through this process. And so what is happening is that they're getting advice from their attorneys that regardless of where you set up, if you want to do business in a state like New York, where there are significant businesses as well as a number of individuals with whom these companies would want to do business, you're going to be required to get a special purpose trust charter in that state, known as a BIT license. So you might as well get your trust company charter in New York and then go get your MTLs everywhere else. And that, I think, is, from what I understand, impacting the desirability of establishing the business in Wyoming. One way to circumvent that would be for the state to have reciprocity with other states sort of built in. But there are puts and takes to that reciprocity, and that's kind of what I think we might want to spend a few minutes discussing. And I think I know that the commissioner has some comments in this regard, and then I'd also like to ask my colleague, the former bank commissioner, Albert Faulkner, to share some thoughts from the perspective of the industry and the industry association, if that's okay with you, Mr. Chairman.
Mr. Bell, I think it's fine. I think it's better to hear expert testimony, and then the committee can take all that into consideration and make a decision, or at least that's how the process is supposed to go. So yeah, let's start with our state agencies. Mr. Bishop.
Yes, thank you, Mr. Chairman. This topic of trust reciprocity does come up, seems every year or two. Wyoming is one of the states that does not have clear reciprocity of trust company business written into our law. If you want to conduct trust company business in Wyoming, you must obtain a charter in Wyoming from the banking board. So what that does is it does kind of create a bit of a wall around Wyoming. If you want to, Wyoming has very favorable trust situs, one of the best in the country. And if you want to use that, the best thing to do is to get a trust company charter or be a bank and have trust powers. But it also keeps some of our institutions from being able to do some business outside of our state. In Wyoming, trust company business is generally holding yourself out basically as a trustee. So think of it as advertising. Other states may have similar definitions, maybe a little bit different. Existing trust companies in Wyoming, I mean, I think if you move this forward, you'll likely hear from them, like having the fact that they have kind of control over who does business here. They've gone through the charter process. They are using Wyoming's favorable trust laws to do business. Now, they can take customers from outside of Wyoming. Most of them do. It just depends on what that state has as far as restrictions for how they do it. Can they advertise that? A lot of states have similar laws. Probably not. However, in the trust business, most of the time you don't really go on advertisements, referral based, and so that's generally not a problem. Now, for digital asset activity, that is a little bit different. I think it depends on the activity. Under Wyoming law, pure custody, if that's all you're doing and there's no discretion, that's actually not trust company business under Wyoming law. You don't have to have a trust charter to do purely digital asset custody as long as you don't have discretion. So I've had conversations with other states about this. One of our chartered trust companies in the digital asset space was trying to get do business in that state. And they contacted me, and this was the discussion we had was, well, you don't have reciprocity, so they need a money transmitter license. I told them that this particular company was doing custody. That's actually not trust company business under Wyoming law. So I don't know if that counts as not having reciprocity. They never gave me a good answer. They're still looking at that, you know, that their state's laws on that to see if that's allowed or not. Each state is a little bit different. So it's a bit of it's a mess kind of. What's trust company business? What's money transmission business? And whose law applies basically. As far as I think our position, it really depends on what you mean by trust reciprocity. If you say that as an out-of-state trust company can open up a branch here and offer trust situs to anybody without getting a charter here, we will likely not receive another trust company application ever again. Companies will go to the states with the lowest capital, open up a branch here, and use Wyoming situs. If it means that they can open up a branch here and only offer trust services to Wyoming residents, that's a completely different discussion. So I think a lot of it really depends on what it is that's trying to be accomplished and what do you mean by that reciprocity? There's several different meanings. So things to think about, and then maybe if there's more discussion, we can definitely provide more comments later.
Committee members, any questions for Mr. Bishop?
Mr. Chairman.
Representative Singh, go for it.
Thank you, Mr. Chairman and Commissioner Bishop. Are there any compacts that exist concerning trust reciprocities amongst the states?
Mr. Bishop?
I'm sorry, but I could not.
Were there any reciprocity agreements already in place? If I understand.
Thank you, Mr. Chairman, Representative Singh. Yes, there is. So those states that do have reciprocity, there is a nationwide cooperative agreement for trust company supervision. It's mostly among state regulators sharing supervision. There's establishing there's a home state supervisor where you're chartered and a host state maybe where they're doing business. And so there's various agreements on who's conducting the supervision of that company and who's sharing, maybe examination reports. Since Wyoming does not have reciprocity, we do not sign that nationwide cooperative agreement.
Follow up, Representative Singh. Mr. Bishop, and that's just for the supervisory component, right? Okay. I think it's an important distinction to make.
Yeah.
Committee members, any further discussion?
That's interesting.
Thank you very much, Mr. Bishop. Might actually just have you just stay right there. I know we'll have more questions. I'm going to go ahead and go to public testimony on this comment. Mr. Forkner.
Thank you, Mr. Chairman. Albert Forkner, now with Two Ocean Trust here in Jackson, a state chartered trust company, and formerly, and I enjoy saying formerly, banking commissioner. Glad to make sure that the division's in capable hands. Since my name keeps getting brought up, I've been trying to avoid the microphone, but I guess at some point you get pulled into it. But I do appreciate being able to talk a little bit about this. I do have, I would say, a unique experience and perspective on a lot of the discussions actually happened yesterday and today, having lived through and in the trenches with all of you on how to administer the various laws that were passed. And trust is an area that the broader legislatures discussed, and we know on the Uniform Trust Code is constantly being updated. That's why, given that coupled with the tax structure in Wyoming, has become a very strong situs, probably top three easily. One of the things still holding us back from a few of the other states is this is very much for traditional trust services. I'll focus on that for a second. Very much a referral type business from usually large law firms, tend to be on the coasts, and they for years have had certain jurisdictions where they would send their clients to based on familiarity with the laws in those states and various other things. Wyoming has clawed its way to, like I said, probably the top three. And you've seen that. I think we're, Commissioner Bishop would know this better than me, we got to be bumping up on 30 trust companies. When I started with the division in 1996, we had 2. And so that's, and really, for the first half of my career, there was no movement in that. The 20 plus some, I was involved in 22, I think, maybe roughly chartering companies. I know the division continues to receive applications and approve those, and the banking board looks at those regularly. So I say all of that is that we can't ignore the fact that we now have a good jurisdiction. But one of the things I, in my prior role, thought about, and then when I left, I actually went to a different state and had a trust company there focused on digital assets. And now back with the trust company here that does both traditional and digital asset custody. And so I did want to highlight what was brought up. So yes, there is the Nationwide Cooperative Agreement that was formed in 1999. And one of the things I should say that as my role as commissioner, I was able to serve as chairman of the Conference of State Bank Supervisors, which was the coordinating body for this document. And there's a similar a cooperative agreement on the banking side. Banking has a much more and longer history of combined supervision, interstate activities. The trust space has not had that for various reasons. Wyoming is one of 6 states that hasn't signed that. And for what the commissioner said, because of the lack of reciprocity. Now, reciprocity, what does that mean? The commissioner said very well, there's a whole host of ways to tackle this. There's different thoughts on what's the benefits and what's the costs to the states. Some states don't even attract trust company business because of the liability to the state. So some of them just aren't participants. But those that are, and then the attorneys that are advising clients, to Mr. Revel's point, they go and look to see, well, what is the best situs for their clients, their clients' activities. And so the addition of digital asset activities under a trust charter has very much complicated some of those analysis. Prior to the trust company charter and digital asset custody under that, digital asset activities, exchange activities were under money transmitter licensing regimes across the country. And this was started in probably 2013, 14, I think, is when I first got exposed to it. And the states were trying to figure out, is this money transmission? Is it not? How is that? What do we do with that? So that's where it's landed. And that's why Mr. Revel mentioned the money transmitter intersection with a trust company still needing those license types potentially. So that alone can complicate the discussion quite a bit, but to the topic at hand, there is, how do we determine what trust activity is? And then once we determine that, how do you do that across state lines? In a traditional trust relationship with traditional assets, there's really no interstate type activities really, right? So if you've got a New York or California resident, their attorney says, hey, go to Wyoming for all of these reasons. They refer it to a Wyoming trustee. That's fine. That's accepted across the country is not engaging in trust business as defined as holding yourself out to the public, even if you are a retail trust company. Now, if we go to, say, Two Ocean goes to California and, is beating down doors of law firms, or we've got a marketing team that's soliciting to a specific group, that is, I would say, holding yourself out to the public in that jurisdiction. And in most states have restrictions against that. Wyoming is the same way. But some states have said that, okay, there's ways to work around that. We understand that you're a North Carolina based company, but you see an opportunity, in other jurisdictions. And so therefore they come up with these ideas of reciprocity and what does that mean? When I was probably contemplating this, I want to say 2019 or 2020, we did a comprehensive rewrite of chapter 5. And I mean, it was a massive bill, if you remember that thing. And so very, very engaging bill too. I mean, the things that just the body just thrives on listening to is trust company statutory changes. Absolutely. So, so that's when we got to talking about, well, what does reciprocity look like? The appetite of allowing other companies to avail themselves of Wyoming's strong situs, but not have a presence here. There just wasn't much of one, probably still isn't. I would say though, when you fence out, you also tend to fence in. So we had these very similar discussions in banking and de novo branching 20 years ago. So my thoughts were, and maybe where this body might want to consider, and also it's a kind of a nexus to some of the goals of the Blockchain Select Committee, is there something regarding digital asset activities if you're under a trust charter? So the company, when I left the state, went to, we were a B2B2C. So we were a back end to businesses for their customers. So the customer, so we were the fintechs that, you know, you hear about, whether it's embedded finance, whether it's payments, things like that, that customers would open an account. They didn't know we existed, but we had a trust charter, digital asset activity movement of funds. And so therefore the states really didn't know what to do with us. And so we had reciprocity in some states. Some states didn't even supervise the activity because of the nature of the digital asset activities. And others said, nope, you're a money transmitter regardless of your charter type. I had myself and 2 former deputies on our team, and it was a nightmare. Now, that's again, another topic for another day of there's some dysfunction within the state system. Unfortunately, that's the nature of the beast, probably will always be there. But it highlighted to me then on the other side, the industry side of, is there a solution that makes it clear? And now bringing it back to Wyoming, that if you are Wyoming company, if you are wanting to take advantage of all of the things that Wyoming offers in the digital asset space, the legal clarity that we have, you're going to have difficulties going into certain other states without some sort of a lack of reciprocity, or at least the ability to advertise. And so the former company I was with, we had the situs where we were at for a specific reason. We wanted the contracts based on that situs. I would say that the similar thing would be here, and probably most companies really doesn't matter the state. You know, they're in that state for a reason. So in Wyoming, can you hold yourself out and advertise in other clients and still have all your agreements here under Wyoming law? It's not clear. Probably not, without some sort of recognition that an out-of-state company in that same jurisdiction can do that here in Wyoming. So that would be a reciprocity type discussion that's very limited to digital asset activities. If you're in solely traditional financial activities, or if it's incidental, so most of your assets you custody are traditional, non-crypto, but maybe you have a handful, we can worry about that later. But I would encourage maybe to consider the ability for companies to advertise both in and out of the state. And also something I've not talked to the commissioner about yet is to want to look at the ability to, you know, what is branching for a trust company, for a Wyoming trust company. So it's a different topic, but sort of related. Can a Wyoming company move and open up a location in another state? There is some reciprocity type discussions that need to happen with that as well. But that is one thing I was thinking about. Let's start looking at just this activity, you know, very much nature of assets activity based discussion. And let's give the ability to an out-of-state company to advertise in Wyoming, and the Wyoming company can advertise out of states for custody or for, you know, stable coin activities, things of that nature. So that's kind of what I had envisioned in a prior life and still kind of kicking around myself. So
real quick, let's just, committee members, any questions for Mr. Faulkner? Seeing none, Mr. Co-Chairman.
How sensitive or how narrow can those reciprocity agreements be? Could we have a reciprocity agreement which said that we grant reciprocity for the purpose of marketing alone, for example?
Mr. Chairman, absolutely. I would encourage, and there's probably more. I know the state of Nevada, there's reciprocity is left to pretty much, you know, kind of advertising type activities. I was looking at North Carolina, they have that built in. I think they've probably got a broader one, but there are some jurisdictions out there that expressly state just that. And really that is the policy position. How narrow or how broad does the body want this to be in Wyoming? Some states, you know, it's much more broad. I'm not going to say whether you should or shouldn't, but yeah, you can narrow it to those activities.
So, Mr. Chairman,
Co-Chairman,
if we were to have that capacity for marketing alone, how many states would then be open to the potential for a reciprocity engagement.
Mr. Faulkner.
Mr. Chairman, Mr. Co-Chair. They used to have that number. I'll see if I can track that down. I want to say as we did our analysis, prior company, that we had probably, it's probably half the states had some, we would be able to fit in their reciprocity. It might be a little more, but I can do some research on that.
And
Mr.
final
Co-Chairman.
question, Mr. Chairman. Is the process then, if we had this reciprocity for marketing purposes, we would have to reach out to each of the states and enter into an MOU, an agreement of some sort with that state's banking division? And at that point, the reciprocity could be utilized by our trust?
Mr. Chairman, Co-Chairman, not necessarily. Now, I do think that, agreements, because most agencies have the ability to enter into agreements with other regulatory agencies. Wyoming does. You could definitely do that. There's often, I know in Nevada, it was, I think, a notification. They had to apply for basically they call it a license. But it wasn't necessarily the states interacting with each other. It was just a recognition of, okay, you can do that here if you're coming from a state that would allow.
Self-executing.
Yeah.
Okay.
Yeah. So, but that, again, that's a policy thing. That would be, does the division want the approval or whatnot? There's plenty of ways to word that. And so this kind of highlights, and why I was starting my comments and as the commissioner and deputy commissioner, this is where there's no uniformity in this, unfortunately. Some firms would love the state to be super aggressive there, and others like, no, just go ahead and keep the walls in place that you have. I would say one other thing to contemplate is, if you are, and this really is more broad than just trust company reciprocity, but if you have a website and you're not targeting a specific, like you're not going into another state or a certain demographic, you just have a website, that's considered, basically a national advertising campaign. So banks, traditional banks do that, and traditional banks, there's the ability to open online accounts, right? So there could be a bank in California. They have a great CD rate. They allow me to do it online. I can do that. The deposit is deemed to be taken in that state. Is there, and again, I'm kind of throwing this out there to think, I haven't thought through it. Is there a way for Wyoming to identify something similar to that with certain, and it probably would have to be digital asset type activities, to deem that you are under this, you're not engaging in trust business, you are outside of these states. This client is coming to a Wyoming situs chartered trust company. They are willingly going to them and saying, yes, I want this business or service. Does that authority already exist because that was not a specific target? I was actually talking to an attorney yesterday about that. We went way down into the rabbit hole on that for sure, but that might be a way to also think about, are there certain things under the trust charter that are actually allowed? It's just not clear. And I would say that's something that it was a really good point to think about. It's a mental exercise at the end of the day. I wasn't quite ready to do, but there might even be some options there for certain activities.
Great.
Mr. Co-Chairman,
It's interesting.
Any follow?
No, good. Thanks.
Members, any other questions for Mr. Faulkner? Mr. Faulkner, I think there's a lot of moving parts in this discussion, right? And I think it just comes down to, what are we giving up and what are we gaining? I think there's a lot of discussion about, New York is kind of the big kid on the playground, so people would naturally gravitate towards that. And if we're solving for trying to recruit more business to Wyoming, I think that's an admirable goal. But I think we kind of have to go through the process of, all right, what do we have to give up to get this? And is there any guarantee or even any likelihood that we are actually going to achieve our objectives? So I think if that's the discussion, I think that's entirely fair. Versus, well, let's expand the scope of this, to include marketing benefits, that kind of reciprocity kind of stuff. So I think if we keep it simple in terms of like, what's the low hanging fruit here? Because I think the idea of attracting these trusts, I think it's great, because obviously these and we want more of that critical mass, but I do worry about the odds of success, right? Especially for what we're giving up, right? Lord knows what New York can ask us to comply with, right? Versus saying, hey, let's just see, there's some pretty simple things that we can do to increase business, either in new trust, grow the ones we already have, those kind of things, whether it's through marketing or otherwise. I mean, I think for me, it would be like, if we could prioritize the low hanging fruit, like this is a reach, this one's not, some effort. This one, I think, is low hanging fruit in terms of what we're giving up, all the drawbacks versus all the benefits. I mean, is that kind of analysis readily available, or would that be pretty in depth?
Yeah, Mr. Chairman. Yeah, and I think maybe you start thinking about just the ability to market outside and into. So the other thing I would say, besides just trying to attract businesses to Wyoming, what can Wyoming citizens be granted the opportunity to engage in? So, so they're, like I said, the company I was with could not advertise in Wyoming. So therefore, what we offered, or we offered our clients, offered them, they couldn't benefit from that. So are there services being available that Wyoming citizens are not able to take advantage of because there's not some sort of ability to directly market to Wyoming citizens? So therefore, you can't sign up for this account with this.
Sure.
So that would be something else I would consider. What benefits to the Wyoming citizenry might be being missed out on?
Right. And Mr. Porter, Paul, the question would be, I think that's certainly fair, but there's not a whole heck of a lot of your average Joes walking down the street that are jumping to get at these types of services, right? Usually it's, pretty sophisticated investors, that type.
Well, Mr. Chairman, if I'd
Yeah.
say,
Go ahead, please.
don't want to put words in your mouth, but if you're thinking custody, I would agree. If you're thinking basically payment activities using stable coins, there's probably a lot more people that would be there. I know there's a lot of people that are wanting to engage in that. Again, it's Wyoming. It's less than 600,000 population. I get that part of it. So we don't have the same pool as and target as some of these companies would like. But nevertheless, I would just want to, as a citizen and native of Wyoming, I want to make sure that we have similar opportunities to those that live in other.
Sure.
states.
No, I think it's definitely fair. Do you have a sense of, we've got about a couple dozen of these companies, these trusts here in Wyoming. I mean, is there a high level consensus on the things like, hey, we can't do this, but we want this, whether it's in the marketing realm or otherwise?
Mr. Chairman, I don't know, and I guess I should have said this from the outset. So while we're a part of the Wyoming Trust Association, my comments do not represent that. The association's not discussed it at length. It'll be on our next meeting. But that's again, given traditional activities are often a referral, and you have relationships with law firms versus going out publicly, probably not a big demand. And yeah, there are advantages and disadvantages of kind of opening up the opportunities for out-of-state companies to participate here. But again, there are potential opportunities being missed by Wyoming companies. I don't know if that's a big demand. I know in ours, it's not yet, but we're a 4-year-old company, so it could change. And yeah, but I can kind of pull some of the other companies, and like I said, I'm sure the WTA will discuss this at some length at our next meeting.
Yeah, Mr. Portnoy, I think that'd be really helpful because again, it gives us that direction of like, all right, well, at least we know that this is something that people who live in Wyoming, companies in Wyoming want this. So if there's a way of gaining some level of consensus amongst those folks, whether it's again in the marketing realm or the many other ways which reciprocity could apply, I think, Mr. Co-Chair, correct me if I'm wrong, but I think that'd be helpful for the committee if we want to continue this discussion at our next meeting. But, yeah, Mr. Bishop, please weigh in.
Thank you. Mr. Chairman, a few comments. I don't want to throw another wrench into this already complex issue, but Wyoming exempts virtual currencies from money transmission business. We also exempt custody from trust company business unless there's a substantial amount of discretion. So you have to look at this for a activity by activity, I guess, program of what can be done here in Wyoming, what is Wyoming companies doing that can be done in other states. Because you have to look at what is trust company business, what is money transmission business, and it varies. if there's an out-of-state company that wants to or do just virtual currency in Wyoming, one that's like, unless there's a discretion or fiduciary role, it's not trust company business. If it's purely virtual currency, it's not money transmission business. Therefore, as far as the division is concerned, we don't have an issue with that. Now, it is also a state by state problem because each state's laws are different in what those two things are. So one thing, the comments, I think we would have to go state by state and figure out what exactly is allowed in that state, depending on the activity, not just by a trust company. Because a lot of our trust companies in the virtual currency space, the virtual currency activity they're doing is not considered trust company business by our office. And so, and we're also going state by state, by the way, with our SPDIs. We've already entered into state by state MOUs with other states because our speedies also have to be a money transmitter in some of these other states. So we're already doing that. We've met with all of these other states for that part. So it's a familiar conversation. But then also as far as what other companies in Wyoming would benefit from this, yeah, I can't say, I don't want to speak on their behalf. I have talked to the other representatives of the Trust Association just generally on this reciprocity topic. And I don't want to put words in their mouth, but general consensus is this touching digital assets or is it touching traditional trust business? And that's a big difference.
Well, Mr. Bishop, I think that's a really important distinction to include in these kind of discussions. I mean, I don't know, Albert, if you can weigh in on this, I mean, is that something that, well, actually, Mr. Bishop, is that the exemption of those, of the currencies and trust company business? I mean, would that theoretically inhibit some of these companies from performing some of these services to a broader array of potential customers?
Mr. Chairman, if they're out of state wanting to do that activity in Wyoming, that's the study we'd have to do is what activity specifically are you doing? If it's trust company business, you're not allowed to do it without a Wyoming charter. If it's money transmission business, then yeah, you can't do that without a money transmitter license. If it's neither, then like I said, as far as we're concerned, we don't have any issues with that, but it does take a product by product analysis to determine that.
Okay. Committee, further questions for Mr. Forkner, I guess Mr. Bishop, while they're both up here? Is there anything else? Is there any public testimony online? Okay. Mr. Co-Chairman, my thoughts on this, I think, there's a lot of moving parts and a lot of nuance to this. My thought is for the committee's consideration, maybe if we can get some clear discretion about like, well, what is it that the companies we have now want? Are there things that we can do to be helpful? I think that might be a worthwhile discussion. That's certainly my thought for if we want to carry this forward. Mr. Co-Chair, what are your thoughts?
Yeah, Mr. Chairman, I'm inclined to agree. We can talk about taking action on, I think maybe having some discussion over lunch about it, figuring out whether we want to do a bill draft. What would that bill draft even entail if it was a marketing reciprocity allowance? What would the implications of that be? If that's a short 2-page bill, then maybe we have that as a vehicle for next time to talk about.
Yeah.
We would need to do it next time to take action on it appropriately.
Yeah.
But I don't know if we want to do that. That's what lunch is for.
Well, let's just go ahead and pause on this topic for now. Let's break for lunch. It's 12:30 now. Can we do lunch in an hour or do we need an hour and a half?
It might be 1:45.
Yeah, let's split the difference. We'll reconvene at 1:45.
Mr. Chairman, one thing just to throw out for your consideration, the Department of Health has a pretty limited time
Oh, that's
frame
right.
for them to provide testimony on data privacy. So
Yeah, so we'll just try to do it in an hour. Excellent.
Yeah.
Thank you.